comes to UBS. If you just pull up that one on the screens, and you'll see what they've said is that whether quick commerce margins will turn in FY27 or not, that's the key. They actually have a buy call, and they've reduced the target price to 375 on Eternal. And Swiggy, the target price has been reduced to 510. For Swiggy, they've reduced their quick commerce margins by 100 to 120 basis points for FY27. And they've cut Eternal's quick commerce adjusted EBITDA estimates for FY26-27 by 15 to 20%. That's what I mean, and that's, I think, one of the reasons why you're seeing this kind of pressure as well.
Quite considerable, especially in a scenario where you're seeing increasing competition, but at the same time, this is really the part of the business that they're betting on to take them to the next level. A quick view, Amrish, on these two counters, if you've got a positive view at all, because I think this is one sector or space that has so many people divided. The traditionalists will say that they're not really convinced on the model, whereas everybody who thinks about the TAM, if you can call it that, they say that this is the business to be in. What do you think?
Absolutely. I mean, look at the sort of growth which has happened in the past, especially the past 2 to 3 years. Yes, I mean, competition is bound to rise, but then again, it's going to be that 80-20 game. Even in this space, I mean, the top 2 or 3 will have that 80% of the market share, and the balance will have 20%. And clearly, Eternal would be one among those 2 or 3, which will have that 80% market share. So if you're talking of the next 2 to 3 years, I clearly see this side of the business really booming. And like what I was saying earlier, if the 10-minute thing does not remain and the time limit increases, I think it is extremely positive for these companies, because the amount of capex which goes into a 10-minute delivery, it's much higher than the capex which goes into a 20-minute delivery, because your total space expands, the number of dark stores you require comes down quite sharply, so your OPEX comes down. So you'll surely be getting higher margins going ahead.
Interesting take coming in a profit exclusive. IT department has launched crackdown on food adulteration. This is largely dairy related companies. That's what sources are talking to NDTV Profit, and they're saying Infosys action against these companies. 12 food and drug companies are under the IT scan. It'll be pretty interesting to see. Let's just pull up any listed players in case something is happening. Dodla Dairy, the stock is definitely down in the day's low as well. And also let's get in Hatsun Agro and all these Parag Milk company, where we'll have to see whether this is actually happening on the entire sector or this is just the sentiment, but we'll get in more details regarding this. Moving on to another segment, the profit intelligence segment, that's in where the commodity prices are rising significantly for the consumer durable companies, as they are stuck in a catch-22 situation where they need to take a call whether to raise the prices or not. Somit is here in this profit intelligence segment. Somit, commodities and consumer durables, what's the correlation and what happens now?
Well, a very important and significant correlation is between consumer durable companies and commodity prices. Commodity prices have run up significantly. Copper and aluminium are 2 key commodities which are majorly used in most of the consumer durable items, including air conditioners. And if you look at the copper prices in the second half of FY26 so far, they are up nearly 28%, and aluminium prices have increased by nearly 20%. So now there are 3 key questions in front of consumer durable companies. First, will companies take price hike to maintain the margins? Second key question is, will price hike impact demand? And the third, given the competitive intensity in the market that we are seeing, can companies even take a price hike? So first, let's look at the factual data that we have. Now, copper and aluminium form major part of the raw material cost for fans. Nearly 50 to 52% of the raw material cost is copper and aluminium. For electric motors, 35 to 38%. For air conditioners, 35 to 37%. For lighting products, 20 to 22%. And for main circuit board, which is present in largely all of the electronic items, it's nearly 20% of the raw material cost, that is aluminium and copper. Now, which are the key companies that stand to get impacted? It's Crompton Consumer, Havells and Voltas. Now, what we have done here is we have tried to see the comparison of the last year when we had seen such kind of a surge in commodity prices. What was the margin impact back then? And what we have tried to do here is in FY28, in FY18, if you look at, copper and aluminum prices. They were up nearly 26% and 28%. Now, the impact of this increase in commodity prices was something that was visible in the next financial year, that is FY19. In FY19, the margins of all the three consumer durable companies, that is Crompton Consumer, Havells and Walters were down. For Crompton Consumer, it was down from okay. Let's move on to what could be the impact in FY27 because of this. As per gross, if you get the earlier graphics, as per Goldman Sachs for FY27, the impact on gross margins for Crompton Consumer could be 315 basis points. For Walters, it could be close to 290 basis points, and for Havells, it could be close to 90 odd basis points. So, what's the Cash 22 situation right now for these consumer durable companies? Taking price hike could impact demand, and not taking price hike could impact margin. So that's the Cash 22 situation that consumer durable companies are present.
Absolutely. You don't know which side of, the boat that they should be hanging around. Thank you, Somit, so much for that. In fact, Amrish, how are you looking at this? This is interesting when you're talking about companies like Crompton, Havells, Voltas. Take a price hike, don't take a price hike, where to go? How would you look at it?
I don't think they will have much of a choice but to take a price hike. But I would say those who have still have a decent inventory in the system would be the ones which will benefit because that's at a lower cost. But the way I see it is whatever benefits had come because of GST cut in like September, I think a decent amount of that will get reversed. And I suppose, most of these are not even luxury. They are those items which are required for daily use. So I don't think it will have too much of an effect on the demand. Yes, once the price hike happens, there'll be some small reduction in demand. But if you're talking of longer term, I don't think it'll affect much.
Okay. All right. Let's talk about earnings. And we already mentioned to you at the start of this program that it's going to be earnings heavy post-market. Reliance Industries is one to look forward to. You will also have over the weekend several large banks that will report. But let's talk about the key factors to watch. And you'll have to divide this into the key businesses as well. Somit Sarkar with us to talk about what you should watch out for. Somit, for the traditional business and then for the new businesses as well, what are the key numbers to watch out for?
So when it comes to Reliance, if you look at the numbers are expected to be largely stable on a sequential basis. Not much of an excitement is what is there on the street. Revenues are expected to be up by nearly 1% on a sequential basis. EBITDA number is expected to be higher by close to around 4.6%. Margins are expected to come in at close to 18.7%, and the net profit number that could be higher by around 6% sequentially. But if you look at the segmental data, firstly, the retail number, there the revenue is expected to be up 3%, EBITDA is expected to be up 9%. Now this growth, whatever we are seeing, there is a slowdown compared to what we had seen in the previous quarter. Now there are three reasons behind this slower growth for the retail EBITDA of Reliance Industries. Now this is because of a high base. Last year, the festive season was purely in the third quarter, but this time it's spread across 2 quarters, Q2 and Q3, hence this high base coming in. And then there would be losses when it comes to the JioMart quick commerce segment, and also because the Reliance consumer product business was demerged from Reliance Retail, and hence because of these three factors, the retail EBITDA is expected to be lower, or the growth is expected to be lower on a YY basis. When it comes to the O2C EBITDA, that is expected to see a jump of nearly 6.5%, which is the biggest jump that we are seeing in the last 4 quarters, and this is largely because of higher or better refining margins and because of the weaker rupee that we had seen. And when it comes to the exploration, oil and gas exploration segment, there the EBITDA is expected to be lower by nearly 12%, and this is the biggest drop that we are seeing in the last 15 quarters, largely because of lower realization and lower volume numbers. Now, if you look at the telecom business, that is Reliance Jio, revenue is expected to be up 3%, EBITDA is expected to be up by around 3%, margins are expected to come in at 54.6%, and the net profit number that is expected to be higher by 2%. But the key number, that is ARPU, is expected to be up by just 0.8% to close to 213 rupees. Now obviously we are seeing this growth coming in on the ARPU number for the 6th consecutive quarter, but the growth is the slowest in the last 6 quarters. Now this growth is largely on the back of the tariff hikes and some customer upgradations that we had seen in the 3rd quarter. Overall, numbers are expected to be largely muted for telecom business, and the growth in the subscriber base is largely on the back of new subscriber additions on the broadband segment. Now, the key things to watch out for from Reliance Industries earning would be their commentary on crude sourcing strategy, given the fact that a lot of back and forth has happened when it comes to Reliance Industries sourcing Russian crude. Apart from that, what is their margin outlook when it comes to the refinery and the petrochemical business? How growth is picking up in the retail segment? What are the commentary coming in for telecom tariff hike and Jio IPO would be important to track from Reliance Industries earning.
Reliance Industries, it's going to be interesting to watch out for. Pretty flat on the day of the earnings. Thank you so much for that. Kunal, what would your BTST, STBT calls be? I mean, I know it's a holiday tomorrow, but anything you're looking forward to from a Monday perspective, because it's an earnings heavy weekend as well.
Yeah, I think from this perspective, I will again go from the space of IT. I think IT still looks strong, and your Wipro would be a good BTST trade where the stock has given us a breakout above the 20 DMA. So one can go long over here with a strict stop loss of 262 on the downside, looking for targets of 273 to 275 on the upside.
All right, apart from Wipro also, I think let's just get in the numbers, what the street is expecting. And largely the revenue is expected to rise by almost 3% on a sequential basis. And of course, the key monitorable will be their guidance going ahead. Already the larger names, especially HCL Tech and Infosys, have upgraded their guidance. So this will be very much important. And remember the Q4 guidance which the company gives, that's where the buyback announcements or acquisition might be in focus. AI, BFSI and European geographical segment, that's where the focus would be. And the upward guidance is ranging between 0.5% to plus 1% on a sequential CC growth. So that's pretty much important, Alex, on the Wipro front. But I think Tech Mahindra is also doing well.
Yeah, TechM is certainly something to watch out for. And the revenue is set to rise as much as 1.18%. But I think more than anything else, like in the case with the other players as well, you will watch for one outlook. You will also watch for the margin picture, right? And whether there is going to be an expansion. It is expected to expand by as much as 35 basis points. And again, to reiterate what Moshe Khatri was saying this morning, IT companies are at an inflection point. There is that improvement in sweating of the assets, or a better efficiency that is leading to some of this. Of course, the rupee depreciation doesn't hurt.
Yeah,
right?
I mean, the rupee depreciation doesn't hurt at all. In fact, talking about the rupee as well, it's already hit that 91 to the dollar mark right now. I think
It's a one-month low.
It's a one-month low that you're talking about. So that is something that you need to consider as well in terms of the action that's happening on the Indian currency. We're currently looking at 90.84, but in intraday, it's actually hit that 91 mark already as we speak. Amrish, any views when it comes to Wipro and Tech Mahindra? It will be reporting numbers today.
No, I don't think it'll be very different than what the others have reported. And what you're talking about, the currency. Yes, I mean, currency benefits just for a quarter, maximum 2 quarters. Beyond that, it gets normalized. So that's only sentimentally positive. I mean, I would still be a bit cautious as far as the overall IT space is concerned, at least for the next 1 or 2 quarters. I mean, I think the commentaries have been positive, and that's what is working in favor of the ones which had come out with the earnings. But then whether the commentary really turns into black and white over the next couple of quarters is to be seen.
Okay, all right. So that's a view on TechM as well as on Wipro and on IT in general. By the way, we were speaking, and so ultimately it's becoming 2 big themes or 3 big themes. 1, we were talking about IT. 2, we were talking about capital market plays. 3, we were talking about a few of these banks, right? Yes. Because the PSU banking space, it's been incredible. But there's also Citi that has weighed in on Grow. We spoke about Angel One a short while back. Let's talk about what they're saying on Grow as well. They've maintained a buy with a target price of 195. Where's the stock right now? It's 5% higher, at very close to 172 or thereabouts. So still further upside based on what Citi is saying. They're saying it was a solid Q3. It was characterized by market share gains across segments, but they're also seeing momentum in the margin trading facility space that grows pretty active in. They're seeing a gradual realization of revenues from their new segment, and they're seeing that a scale up of wealth and product diversification set to continue. Jefferies also has maintained a buy and hiked its target price to 195 from 190 earlier, and similar statements are being made. They're saying that Grow's product velocity model is similar, very interestingly, to Robinhood, something that you might be familiar with if you're watching the space. Amrish, you want to weigh in on Grow? and whether valuations, according to you, are comfortable at this point, or would you give it a miss if you haven't bought yet?
No, if you don't have it, then I would surely suggest that one should give it a miss because, yes, I think it's extremely good. I mean, the way they have grown. But at the same time, when you look at the valuations are also decently expensive. And we should remember that there was a huge amount of placement in the past 1 to 2 years, which has happened with the HNIs. And all those shares will be free to trade in the next couple of months. So remember that there'll be a decent amount of, liquidity coming into the stock in the next couple of months, and most of them have bought at much lower levels. I think the last deal which had happened was at about 134, 135 levels. So quite a few of them would surely come to sell. So we should keep that in mind.
But one more capital market themes stock needs to be discussed, and that's actually doing well. I can't help it, but we have to cover them. Jefferies on 361. They have maintained a buy rating. Target price is 1410. Very bullish report coming in when it comes to the Q3 earnings. They're expecting a 20% CAGR in core profits for the next 3 years. And Citi also, they have maintained buy rating, and the target price has been hiked to 1700. Now there's a re-rating potential expected, and an all-round performance is there. That's why the flows are also important, and the productivity benefits, that's also going to aid the margins going ahead. Kunal, I want to get you on this 361 WAM. A good strong performance coming in, trying to come down a bit from the day's trade, but how are the medium-term setup looking like?
I think definitely the medium term looks very attractive for the stock. 1130, 1150 has been a good demand zone for the stock. So any dips towards the support, the immediate support, if you look at the gap up, what it had opened around the mark of 1165, 1170, I think that would be a good area to enter into the stock. And one can keep a stop loss of 1120. I'm expecting a positional target somewhere close to 1260, 1280 on the upside.
361 as well. Amrish, tomorrow you have HDFC Bank, you have RBL Bank, Yes Bank, and ICICI Bank that will be reporting numbers. What is your expectation from a Monday perspective as well? Because basis expectation, it's going to be interesting how Bank Nifty actually looks like on Monday.
Yeah, in fact, I am waiting for some surprise from Yes Bank as well as RBL Bank. I think those are the ones to be looked at. HDFC, I don't think, it will be more or less flattish. ICICI Bank also should be flattish.
All right. Thanks a lot, Ambarish and Kunal, for your time, giving both fundamental and technical perspectives. Of course, we are moving towards, earnings heavy weekend. So we'll be, of course, focusing on large players. And today itself, Reliance will also be coming out with its numbers along with Wipro and Tech Mahindra. But largely, it's been a range-bound move. We have seen a bit of correction coming in, but still Nifty holding near that 25,700 mark. But Nifty Bank's technical setup is good. It's still maintaining that 500-point up move. Let's go and see what are the stocks in the Nifty constituents which are buzzing. And of course, there's no thought that the IT has done well, and Infosys is also seeing a much more good up move. It's up almost 6%, Tech Mahindra up 5%. So you can see it's the day for the IT, but yes, HDFC Bank is holding the fort as well. Amongst the losers, if you look at it, Asian Paints, Hindalco, Cipla, Jio Financial and Eternal, that's where the cuts are coming in of more than 2%. Little bit of momentum in the India VIX also, but nevertheless, the options data is still suggesting a range-bound move, and some positions are being taken place ahead of the earnings. Let's see the sectors where the move is happening. And PSU Bank is holding up. We have already discussed about the IT front, the banking and the oil gas segment are doing well. The rest, all of them are in the range. But the healthcare, consumer durables and the pharma segment, that's where the selling is more. Advanced decline ratio, let's pull up and see what's happening. Largely we see it's almost 3:2 in the ratio of the bears. That means the mid cap and the small cap indices, that's where some kind of pain is there. Remember, for 2 days, for the last 2 trading sessions, there's a good value buying in the small cap space. But now, let's just figure out how the mid cap and the small cap indices have fared. And before that, we'll just show you the market closing. We are about to close the market. But yes, the rupee was under pressure near that 91 mark. And that is where the concern is definitely there for the street. But yes, mid cap is closing in the red. Small cap, let's get them in. That's where the concern again comes back after 2 days. And let's just pull up the BSE 500 constituents to give you the entire picture of the stock specific move Federal Bank, that stock is up 10%, a very strong up move coming on the numbers. India Mart, there's a Nalanda Capital entry. And also, apart from the IT names, LTTS on a weaker earning, that's where we saw the stock. Profit booking in MRPL, Embassy Development, reversals are happening, and Hitachi Energy, this has seen sustained selling pressure. So these are the important stocks in the BSE 500. Let's see what are the stocks to focus on, especially its earnings heavy weekend. We will be busy as analysts. India Forex numbers, US industrial production comes, but of course the big one is definitely going to be the Reliance numbers, and these are the China GDP numbers. The stocks next week, these are the stocks which will be exiting the anchor lock-in, but the earnings post-market, that is where it will be very busy for everyone, including us. And also the work starts in Saturday also. For tomorrow, there are just like large banks coming in, HDFC Bank, ICICI Bank, you have Yes Bank, you have RBL Bank. All of these banks will be coming out with their numbers, and look at it. Our banking analysts will be very, very busy, and of course our team as well. And other companies also for next week. This includes BHEL, CEAT, Havells, Hindustan Zinc, as we get into the thick of the earning seasons in Q3, and that's what matters more than macro in the coming days. Also, the IPO listing for Bharat coking coal would be there, and especially Coal India is something which you should be focusing on. Very strong subscription numbers also coming in. So these are the entire cues for the next week and how the market is positioned. That's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express by Himangshi.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I'm spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. We've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets are fared today. So benchmarks have erased the Friday morning cheer in a late pullback with Nifty ending below 25,700 levels. Nifty has ended largely flat for the week while Sensex also managed minor gains for the week. And sectorally, if we talk about, so IT stocks have seen some strong buying there in trade today as the sentiment improved on the strong Infosys outlook, and on the losing side, pharma was the top sectoral drag today, followed by energy and metals. In fact, Infosys has raised its full-year revenue guidance to 3 to 3.5%, which is up from the earlier 2 to 3%. Now, after delivering a largely in-line Q3 performance, but profits are, taking a hit down nearly 10% sequentially as the company absorbed a one-time 1,289 crore impact from the new labor codes, dragging the bottom line. Despite the profit miss here, Infosys has reported strong deal momentum with large deal TCV jumping 56% quarter on quarter to $4.8 billion, which is one of its strongest quarters on this front. And Cipla has been hit by two major disruptions. First, that its subsidiary has paused production of lanreotide, which is a key peptide drug, and with manufacturing halted, the resupply is now pushed out to the first half of FY27, and this is creating a long supply gap. Second is Pharmatin's facility in Greece, which is a partner in Cipla's supply chain, has received an FDA form of 483. So inspectors have flagged data integrity issues, and this is raising the compliance concerns. So together, these manufacturing and regulatory challenges pose near-term supply pressures and also a potential risk impact for Cipla. And viewers, AMC stocks are seeing some sort of strong traction today. This is boosted by robust Q3 numbers from both the HDFC AMC and ICICI Prudential AMC. So the stronger than expected earnings have triggered broad-based basket buying across the asset management space. Now, at the same time, domestic institutional investors are steadily increasing their positioning, and this is also signaling rising confidence in the sector stability and also the earnings visibility. Brokerages too, in fact, are turning firmly bullish, saying that the worst of the margin pressure is behind the industry, and importantly, the market believes that the impact of lower, tier norms is largely factored in. I beg your pardon. Viewers, Nalanda Capital has made a notable move in IndiaMart Intermesh. This is scooping up a 1.86% stake for 236 crores, and this is signaling renewed institutional confidence in the B2B marketplace. So the stock's valuations have sharply cooled, now at a P ratio of 22.5 times, which is compared with the peak of 90 times in 2021, making it far more reasonable for long-term investors. And IndiaMart continues to deliver strong return ratios with ROCE at 34% and also ROE at 29%. And this is backed by a solid 29% PAT CAGR over the last 5 years. And as the largest online B2B marketplace in India, the company remains well positioned. Let's look at some brokerage notes now. Morgan Stanley has maintained its equal weight stance on L&T Technology Services while cutting the target price to 4,420 rupees. The brokerage has said that the company's recent strategic portfolio running is likely to moderate growth across FY26 and FY27 as the LTTs, recalibrate its mix of offerings. So, however, Morgan Stanley expects the pace of, margin improvement to pick up, and this is supported by operational discipline and also sharper execution. They have also highlighted that the company's medium-term margin aspirations remain intact despite the near-term growth headwinds. Next up, we have Federal Bank that has delivered a strong Q3 performance with robust NII driving a clear, earnings beat and also overall growth coming in better than expectations. Profitability, if we look at, remained healthy, and this was supported by strong, NIMs and also a solid uptick in the other income segment. And the net interest margins have improved, 12 basis points sequentially to 3.18%, while the other income has jumped 20% year on year, and this is giving meaningful push to to the bottom line. So cost discipline has also showed through, with the cost to income ratio easing 12 basis points to 53.9%. And on the asset quality front, if we look at, provisions have declined 8% quarter on quarter to 330 crore rupees, and also slippages have been moderated. In fact, brokerages are turning increasingly upbeat on growth outlook, with both Citi and Jefferies maintaining their bullish stance. Now, Citi has a buy rating with a 195 rupees of target, and this is highlighting strong, traction in the MTF momentum, also improving the client activity and also steady progress in wealth and product scale up, while also retaining a clearly, constructive view on the platform. Jefferies is equally positive, and they've also, assigning a 195 target, and also pointing out that new ventures are ramping up faster than expected. They also believe that new businesses will be a major future growth drivers, and also they've noted that gross product velocity model mirrors Robinhood's approach. So Jefferies is also factoring in better operating leverage and raises FY26-28 EPS estimates as well. Viewers, Investec is staying firmly bullish on Angel One, maintaining its buy rating with a target price of 2,850 rupees. Now, the brokerage says that a strong quarterly performance should trigger earnings upgrades, with better broking, realizations driving a clear PAT beat here. Now, Angel One has also maintained its market share in the broking business, and they are underscoring the strength of its competitive positioning. Now, Investec is highlighting that the company's digital-first operating model is now delivering meaningful operating leverage, while new initiatives are also showing strongly early traction. Next up, we have Kernex Microsystems that has scored a big order win, bagging a contract worth 2,465 crores. And the order is for the supply and installation of 3,024 sets of onboard Kavach equipment, also strengthening the company's presence in railway safety space. So the project will be executed within 12 months, and this is marking one of Kernex's, fastest rollouts for such large-scale deployments. And also, what makes this, even more significant is the company's scale. So Kernex market cap as of January 14 stands at 2,128 crores, meaning that the order size actually exceeds the company's valuation. And since we are talking about, the orders, let's also talk about a stock that was under pressure due to an order. Now, HPL Engineering has missed out in the latest round of locomotive Kavach tenders, losing the bid for 6,300 units. Now, the company was edged out to, due to the lower competitor pricing, which has tipped the balance in highly competitive round of evaluation. Now, following this outcome, HBL has now revised the total demand estimate for Kavach-equipped locomotive units to 12,129 units, and this is reflecting the scale of opportunity still ahead in the nationwide deployment pipeline. Viewers, next up we have SW Solar that is soaring, after posting a strong Q3 performance there. Revenue has jumped 13.9%, which is nearly 14% to 2,002 crores versus 1,837 crores. Even though EBITDA has slipped, 4.8% to 66.9 crores, and this is pulling the margins down to 3.2% from 3.8%. The bottom line, however, showed stress, and the company has reported a net loss of 2.8 crores compared with the 14.8 crores of profit last year. But sequentially, if we look at, the numbers show sharp improvement, and this is backed by record order inflows and also the highest ever order book. Next up, we have Patel Engineering that is in focus after ace investor Vijay Kedia picked up a 1.01% stake, and this is also signaling renewed interest in the company's growth trajectory. Now, operationally, if we look at the numbers for H1 of FY26 show a mixed but improving picture. Revenue is up 7.2%. This is reflecting steady project execution. However, EBITDA has dipped 2.1%, and this is also indicating some pressure on the operating margins front. Now, on the positive side, if we look at profitability has strengthened meaningfully, with net profit rising 20.1% in the first half of the year. Next up, we have KPI Green that has secured a major solar order. Gujarat, bagging contracts for 534 megawatt solar power project. Now, the mandate covers both supply of goods and also comprehensive on-site services, reinforcing the company's execution capabilities in the large-scale renewable project. Now, the order strengthens KPI Green's position in the rapidly expanding solar energy space and also adds meaningful visibility to its project pipeline. Now, since we are talking about green energy, let's put the spotlight on a renewable energy counter. Vari Renewable has delivered a strong Q3 driven firmly by robust execution, leading to its highest ever revenue. EBITDA and PAT, the company has maintained its EBITDA margin guidance at 18 to 19%, and this is supported by disciplined project delivery. The unexecuted order book stands at 2.92 GWP, giving strong visibility for future quarters, while the company has also expanded into BESS and data center solutions. Now, broadening its clean energy footprint. Financially, if we look at, revenue has surged 136% to 851 crores. EBITDA has jumped 121% to 159 crores, and net profit has risen 125% to 120 crores, even as margins have moderated slightly to 18.7% from 20%. Next up, we have ME Photovoltaic that has posted a strong Q3 performance with growth driven by its capacity expansion and also better utilization levels. Now, both of which have supported a sharp scale up in operations. The company is set to deliver 6.3 gigawatts over the next 12 to 18 months, giving strong visibility for future revenues. Financially, if we look at, it's been a standout quarter. Revenue is up 118% to 1,152 crores. While the EBITDA has risen 105% to 413 crores. Margins came in at 35.9% versus 38.2%, still very healthy despite a slight dip there. Now, Zydus Life Sciences has received a key approval from the US FDA for its Electrom Bopag tablets, now which is a drug used in the treatment of blood disorders, and the therapy works by stimulating the bone marrow cells, helping increase the platelet production in patients with low platelet counts. Now, the tablets will be manufactured at Zydus' facility in Ahmedabad, and this is strengthening the company's US portfolio. So the drug is a significant opportunity, and it also enjoys annual US sales of about $1.26 billion. And India and the European Union are edging closer to clinching a long-pending free trade agreement as top EU leaders are set to arrive in Delhi for Republic Day celebrations. The visit is not just symbolic, it's strategic. Negotiations on the India-EU trade deal have made significant progress, with 20 out of 24 chapters already closed. Officials are saying that only a few tough issues remain, and the final push could happen during the summit on January 27. Now, Commerce Minister Piyush Goyal's recent Brussels visit is also being seen as a decisive step. Now, if sealed, this could, reshape India's trade ties with its largest export destination. And viewers, we are getting to know that Wipro is out with its quarterly results, and let me just first take you through the numbers there. So EBIT, if you look at the revenue, which is up 3.8% at 23,556 crores versus 22,000. If you can go back to the revenues, yes. So versus figure is 22,697 crores, which is probably in line with the estimates there. If you talk about the net profit numbers are which is down 7%, at 3,119 crores, and this could be on the back of the new labor codes. If we look at EBIT, so this is down 5.1% at 3,491 crores versus 3,681 crores, and margin stands at 14.8% versus 16.2%. So there's a slight dip there on the margin front as well. This could be because of the net profit that is down and seeing some pressure because of the labor codes. My colleague Jasmeet, who tracks the sector very closely, is joining us in the studios today. Jasmeet, over to you. What are you making of the numbers of Wipro?
Well, on the first view, we see a weak set of numbers coming for the company. We see the margins have taken a downtick of 140 odd basis points, and further the EBIT also is down about almost 5.1 odd percentage. Well, this is interesting to watch out, given the rest of the IT pack have already reported their extra additional new employee cost onto the overall profit. But this particular company has added that cost in their employee expenses and then taken the overall hit. So that's why we see the hit in margins coming up, because the new labor code expense is added in the employee cost and we see the margin down. But in terms of net profit also, we were expecting a healthy rise of 3% net profit. Even that is down on the similar cases of new labor code. If you look at the other key aspect, the deal wins for the overall company stands at 3.3 billion, which is turned out to be healthy in this particular quarter. If you look at the overall estimates, we were estimating a rough deal win around the same range. Now, what would be the interesting aspect is to see the overall IT revenue in CC terms. We're expecting an overall uptick of 0.5 to 0.6 odd percentage, but the IT CC revenue is up by 1.4 odd percent in this particular quarter. In terms of other reported CC terms, it's up 1.2 odd percentage. We see a healthy growth in terms of the CC revenue. All in all, we see a mixed set of numbers at this point in time. It's a wait and watch for management community to get more understanding of what we make out of the results.
Yes, Jasmeet. So, how do you see the guidance there, change going forward, as some of the brokers were expecting an upgrade there and few were expecting no change. So, what do you have to say on that front?
Well, on the front of guidance, we see a really positive up move for the company coming in. Last quarter, the company had reported negative 0.5 to positive 1.5. But in this quarter, we see a guidance update coming from the management where they expect 0.2%. The overall guidance is in line with what the brokerages were expecting. Something like a Nomura and Citi were penciling in this kind of brokerage update, and it has come in line with what they were expecting. So that's something interesting to watch out from the negative overall momentum. The Wipro has itself moved into from a negative guidance to a positive guidance going forward, which is very interesting given after Infosys, where they reported overall guidance update from 2 to 3, they have moved it to 3 to 3.5, which is a positive up move. In a similar way, we have seen that coming from Wipro as well. So all in all, we see a positive guidance, good set of deal numbers, but a hit on margins and EBIT. That's something which the street might not like as of now. I would also talk about the attrition. The attrition overall stands at 14.2 odd percentage in this particular quarter, which is what we had seen in the previous quarters as well. But it's a wait and watch of overall headcount addition of what we see going forward.
Absolutely, Jasmeet. And also, what's catching my eyes is the interim dividend, that has been given by the company. So what sort of message does this convey, despite the net profit, seeing some pressure due to the labor codes?
If you look at the overall, it's a mixed picture for the entire IT pack, must say. Something like where they give a bumper dividend, and something like Wipro sticking to their old guidance and stuck to the same dividend of 6 odd rupees. That's something which will be watched out of what are the further plans. In Wipro, there is also wait and watch of the buyback coming up. As we saw buybacks in the other folks, Wipro is also as of now wait and watch to see if the company goes ahead for the entire buyback. While also to add on, the overall total headcount stands at 2.4 odd lakh and attrition has come to 14 odd percentage, while net utilization stays in line with what was in the previous quarter at 83 odd percentage. So all in all, again, just to sum up the entire numbers for the viewers, we see that the numbers look on a weaker side for the company. The EBIT is down, the margins are down, but in terms of deal wins, they have come in line with the deal wins, and the management also upticks the guidance going forward, showing overall positive up move coming in from the Q4, what they expect.
Absolutely. And also on the AI revenue front, what do you have to say on that? How are you tapping that aspect in the, numbers?
We look at the overall AI revenue, we are yet to get more details on that, but if you understand the AI aspect, out of 3, we have 4 companies reported. Out of 4, 2 of them have come up and given their AI revenue for the individuals, for the companies. But something like an Infosys is yet to report, and Wipro also is yet to see the overall AI uptake going forward. It's a wait and watch for AI revenue angle as well. But it will be interesting to watch out and understand from management what are their views on overall AI and how do they see the overall AI shaping up for the company. Given the AI ramp up is happening at a very quick pace for other players, and something like a Wipro being at that large, it will be interesting to watch out how overall AI works for the company.
Absolutely. So we are also being joined by Gaurang Shah, Senior Vice President, Geojit Financial Services, on the phone line. Gaurang, hello and welcome to the show. So Wipro is out. What do you make of the numbers?
Well, flashing numbers, whatever I can see in front of me, top line, bottom line, I think there's a squeeze in margin as well. 6 rupees dividend is what they have declared. Historically, Wipro, being a frontline stock, large cap IT stock, has been disappointing when it comes to comparison with TCS, HCL, Tech, Mahindra or Infosys, as a matter of fact. Disappointment is there. Of course, business related update, either via press conference or any detail verbatim from the management will possibly help soothe the sentiments. Since we are discussing Wipro, a disclosure or the recommendations on Wipro from our fundamental team is on the reduce stroke sell side. We believe large cap names TCS, Infosys, HCL Tech are better bets. Small disclosure, all recommendations that I'm sharing with you on this channel this evening are a part of our fundamental research team recommendations. Our company Geojit or I do not have any kind of personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. So they might hold their investment interest. But on Wipro, we've been maintaining a reduced stroke sell stance, and the numbers doesn't seem to be impressing, at least whatever is in front of me.
Hello, Mr. Gaurang. Jasmeet Singh joining in here. We have seen something like a Wipro has added the new labor code impact into their employee cost. Is that the reason why we see a downtake in the margins and the EBIT?
So, Jasmeet, look, labor code impact has been there in TCS, HCL Tech, Infosys, we saw yesterday. So, I think, and like we had discussed earlier also, my sense is, this is my personal view, that most of these IT companies would be taking a large chunk of that negative impact of labor code cost into possibly in this third quarter and maybe a slight in fourth quarter. I'm just assuming this. But even otherwise, if you actually go to see, in terms of margins as well as the kind of expectation that was there, they have fallen short of that.
Got that view, but we see numbers coming on the weaker end, but overall CC revenue sees a good uptake. Well, what we were estimating was anywhere in 0.5 to 0.6, but in the current quarter we see the overall CC for the company stands at 1.2% reported terms. So do you see the CC growing, but again the margins shrinking for the company? How do you see that coming?
I think that is a possibility, and most important thing is whether they will be able to maintain this CC growth. That's going to be a big question mark. And like I mentioned, in terms of comparison, I think other large cap IT companies have done well compared to what Wipro has been. I think there is some mojo missing as far as Wipro's numbers are concerned.
Gaurang, also, is this quarter a sentiment reset for Wipro Street expectations according to you now?
One quarter should not be a kind of, guideline or giving you the kind of, view that whether there is going to be a positivity or negativity. I think Wipro needs to do a lot more in terms of getting their act together and, falling in line with what other large cap IT companies are doing. I hope that going forward, if there is any major improvement in the business strategy, and of course with respect to AI, we have seen other companies. I'm not too sure about what Wipro's plans are because I've missed that particular line. But according to me, continuity is something that matters for changing any kind of stance as far as our view is concerned on Wipro.
Absolutely. And Gaurang, also for investors who are watching us right now and who are eyeing, to buy or take fresh positions in the IT pack. So Wipro, after, these results, a disappointing set of results, if I may call it. So what suggestions still do you have for those investors out there?
So like I mentioned, our fundamental team has a reduced stroke sell recommendation, and I believe large cap names like TCS, Infosys, HCL, Tech, Mahindra are better investment ideas with absolutely clear time horizon of 1.5 year plus, given the kind of backdrop of events that IT sector is coming out from. Wipro I would again reiterate that our fundamentals research team has given a reduced stroke sell recommendation. Even mid-cap IT companies have done better than what Wipro has done in the past.
Well, now if you look at the next company coming in, we have Tech Mahindra. Gaurang, do stay with us. Let's really pull out the Tech Mahindra numbers. Let's see what the numbers show for the viewers. Now, if you look at the overall Tech Mahindra flashing down the screen, we see that EBIT margin has come at 13.1. We see a good growth there coming in as the management guides to reach 15% by FY27. It's a wait and watch. They have one more quarter left of how they'll fulfill that balance. And we look at the revenue has come at 14,303 odd crores, while above what the estimated. If we look at the net profit is slight down, while we were expecting a 15% uptick in the net profit, but we see it has coming at 1,122 odd crore, while the EBIT also sees a healthy up move coming in. The net profit for sure has that additional the new labor code impact that we can see. Gaurang, I would like to come to you. You have seen the Tech Mahindra numbers are just out. A healthy growth in margins, must say. They have crossed the 13% mark and on track to that 15% guidance by FY27. How do you see, how close are they? They have to still expand by 190 basis point going forward.
So I mean, I'm just trying to digest what numbers you're telling me, to be very honest. But Leo, this is what exactly I was saying with my comments with respect to Wipro and what Tech Mahindra and others have done. So there's a huge gap between other large cap companies and Wipro, what they deliver. So in terms of catch up, I think definitely, with the kind of business strategy that most of these IT companies are going through and revamping themselves and bringing up their capability and capacities with respect to AI and other investments, I don't think it should be very difficult for Tech Mahindra to mark up to that kind of a number. As a disclosure, we do have a buy recommendation on Tech Mahindra.
So you see that gap between that margin filling up. I would like to get one more view on the margin aspect itself. We see that the margins are up about 60 basis points in this particular quarter, from 12.5 to 13.1, and now they have to move to that 15% range bound. So how much do you think the overall 4x will help the company reach that? And that's the FY27 target. And we have almost a quarter left where the company will have to expand and reach to that goals. So what do you think? How soon that gap will be bridged? Firstly that, and secondly, how much of 4x impact, that's the main question, will help the company reach that margin gap?
See, 4x impact, basically what I understand is that most of the companies, whether they're IT or a pharma or any company which has got dollar income, they also hedge their position as far as currency risk is concerned. So it will be difficult for me to quantify as to whether they'll do it in 1 quarter, 3 months, or maybe in 2 quarters, 6 months. I think that we'll have to just wait and watch and let the management give a little bit of verbatim down that so that we have a little bit more clarity. I would not jump and make a statement that they will be able to meet up in maybe about a quarter or 3 months. I will wait for the kind of guidance and the kind of commentary that the management would be given with respect to this.
Okay. Thank you so much, Gaurang, for being there and decoding the numbers for our viewers out there. Thank you so much for joining us. And Jasmeet, overall, if we look at the numbers of Wipro and Tech Mahindra, so are you surprised? And if yes, so what is that surprising factor?
Well, if you look at the overall Wipro numbers, it was surprised to see the company adding that new labor code impact into the margins, and we saw the margin impact. That something came out of surprise to the overall street. While I would like to also address the Wipro number once, if we quickly pull the numbers on the screen, we see that the revenue sees a slight uptick in terms of what was expected. And on the other hand, if you look at the overall margins have seen the hit, the whole EBITDA has seen the hit, and even the net profit is something we saw the hit. See, exactly right here. The revenue is up by 3.8%. It's above what we were expecting in terms of EBIT. If you look at the overall net profit is down 7%. This was expected on the back of the new labor code. But in terms of the margin, where we were expecting a roughly 30 to 40 basis point of healthy up move for the Wipro, that was not seen. Indeed, we saw a slight downtick of 140 basis, or major downtick of 140 basis point coming in from 16.2. They have moved down to that 14.8 range. When we have large players like TCS reporting around 25-26% of margin, and Wipro being in a similar space and having almost 1,000 basis point lesser margin, that's something which will be watched out very keenly by the street. Apart from that, the deal wins have come up what they were expecting in terms of what the expectations were, and also in terms of the guidance is something that is also seen as a positive up move going forward. From the negative overall macro momentum, they have moved to a positive in the 0 to 2%. So that's a very interesting move. Now let me quickly go through the Tech Mahindra numbers for you all and address the numbers. If you look at the overall Tech Mahindra top line, we see the Tech Mahindra top line coming in line with what the estimates were. If we could quickly pull out the Tech Mahindra numbers on the screen. While in terms of the net profit, we see it has seen a slight downtick. We're expecting a 15% up move in the number of profit, but the profits have obviously seen that impact of that new labor code, down about 6%. Now in terms of revenues, is a healthy growth 2.8 in line with what the expectations were. If you look at the overall margins, even margins have moved in a similar range, up about 11.3%, a positive up move for the margins. And a bit in terms of margins, it has increased by almost 100 basis points from 12.1 to 13.1, and they are very close to the 15% mark. In the previous call commentary, I did mention that when they reach the end of the margin, it becomes a little harder for them to close that gap. If you look at the other details for Tech Mahindra, a strong set of deal wins coming in for the management. We're expecting a $600 to $800 million of deal wins, but the management has come up with $1,000 million of deal wins this particular quarter. They're roughly up about 34.3% on QOQ basis, which is a very positive up move. We would like to also understand how will this deal overall ramp up happen going forward, and this ramp up might have additional impact on the margins. Even that will be something which will be queuing the management to understand more ideas on that. In terms of other aspect, we see that the overall attrition stands at 12.3, which is a healthy range for the company, and the headcounts are down in this particular quarter, down about 872. So all in all, we see a positive up move numbers coming in for something like a Tech Mahindra, but for Wipro, we see a slight concern across the street.
Okay, Jasmeet, thank you so much for, decoding those numbers for our viewers. They're giving us a holistic pictures of Wipro and Tech Mahindra's quarterly results. And with that, it's a wrap on this edition of Market Express, viewers. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
NDTV Golf Pro-Am in partnership with EGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you deep insights into news related to markets national as well as international news. Today, we'll begin with a big exclusive news. According to sources in the IT department, the IT department has launched a major crackdown on food adulteration. Target are companies involved in milk, ghee and edible oil production. As a part of this investigation, 12 food and drug firms are under the scanner. We have also learnt that such operations are underway across Delhi, Rajasthan and Uttar Pradesh. The action follows FDA sharing adulteration data with pharma and fertilizer units next in line. My colleague Shrimi Chaudhary gets us all these exclusive details.
Absolutely, in a significant move, the Income Tax Department has launched enforcement action against companies allegedly involved in food and drug adulteration and widening the government's crackdown on unsafe food practices. In fact, sources told NDTV Profit that at least 12 companies dealing in products such as milk, ghee, vegetable oil and whey protein have come under the tax department scanner. In fact, search and survey operation already been initiated across Delhi, Rajasthan and UP and will soon reach to multiple cities. Now, what makes this action notable is the close coordination between the several departments, especially Food and Drug Administration, which recently shared intelligence data with the Income Tax Department after flagging adulteration in certain products. Now, this data sharing is said to have provided the initial trigger for the tax probe, but the Income Tax Department, of course, is going beyond the adulteration and looking into the financial trail behind it. Now, investigator began spotting patterns that did not add up in the company's book, and one of the major red flag being is the timing of the transaction. Several bills actually were adjusted near the end of the financial year, especially around January 31st, February 28th and the March 31st of last year. That period is actually used to square off the accounts before the books are actually closed. Besides, the transaction exceeding 1 crore with a single party were allegedly completed in one or just two entries and often close to year end raised further red flag. Books also showing use of a lot of round figures, especially in the high value transaction. Now, the department is also examining the TDS payment pattern. In some cases, all TDS was paid in a single month and that were long gaps between the payment. So clearly, it's a developing story as we get to know more as investigation widen. But what we've been given to understand that the probe will soon reach to some of the companies in the fertilizer as well as pharma sector. So we will be, keeping track of the story and will bring you more as we get more information on the development.
Thanks so much for that, Shrimi. And let's now take a look at how the Indian markets performed today. Markets closed a volatile day of trade with the Nifty snapping its two-day losing streak. The index, in fact, gave up most of its intraday gains to end just a point above 25,700. The gains were led by IT majors like Infosys and Tech Mahindra that gained over 5% to emerge as the top gainers in the Nifty 50 basket. Broader markets, in fact, saw a tad bit more pressure than benchmark indices. The sectoral picture settled mixed, with IT shooting up as the highest and the most strongest actually sectoral gainer, and pharma slipping the deepest. Let's get in my colleague Varsha for a detailed roundup of today's market action.
Yes, benchmark indices outperformed broader market indices. Nifty snaps two-day losing streak. Infosys and Tech Mahindra gain over 5%. Top gainer when it comes to Nifty. Nifty Midcap 150 closed on a flat note. Federal Bank and OFSS lead the gains, while Federal Bank gained nearly 10% after its strong Q3 results. Nifty Small Cap 250 snaps two-day gaining streak. Engineers India and Lemon Tree are the top losers. Nifty IT gains over 3% for the day, emerges as the top sector for the day. Infosys and Tech Mahindra gain over 5% for the day, emerges as the top gainers when it comes to Nifty IT.
Thanks so much for that, Varsha. And viewers, IT stocks are back in focus as sentiment improves following a stronger outlook from Infosys. All eyes now turn to the IT pack as companies report AI revenues as an important growth driver. My colleague Jasmeet now shares with us all the insights on what's really driving the sentiment in this particular space. Jasmeet.
If you look at something like an Infosys, we have seen the guidance outlook, which actually changed the overall perspective. The CEO expecting the update from the lower end, that's from 2 to 2.5%, but the company has surprised the street by giving an immediate guidance update on both the levels and currently stands between 3.3 to 3.5. Now, what we see going forward from here is that the management remains confident in terms of the deal booking and the overall Q3 performance. If you look at the overall brokerages, they have hiked the target price as well for this particular company, and the management says the deal booking which they have done this quarter at $4.6 billion, which is nearly up 57% when you look at on quarter basis. In terms of other key aspect, the attrition also has come down for the management, and management sees the same rate going forward, and management continues to hire employees as well. If you look at the overall employees that they have hired in this particular year, it stands at 18,000, and they remain on track by seeing the employee addition basically means the company sees a good growth going forward. So even that is something which has boosted the overall sentiment in terms of the Infosys results.
Thanks so much for telling us what exactly is driving the sentiment in the IT pack just made. But clearing the air on NSE's long-awaited IPO, NSE CEO Ashish Chauhan said the application for IPO has been accepted in principle and expects it to be in public after 6 to 8 months of receiving the no objection certificate from Sebi. Speaking at the regulator's annual conference Summer 2026, he also clarified that the IPO timeline is dependent on regulators and third parties, not internal control. Listen in.
Good news that yesterday it has been told that our application has been accepted. Once we get the formal no objection certificate in writing, then we will be able to prepare DRHP, which will take 3 to 4 months. And then after that, we submit it to Sebi again. Again, they have a process to ask queries and other things. And so they also take at least 2 to 3 months, sometimes even 4 months. So broadly, somewhere around 6 to 7 months or even 8 months after the Sebi's no objection certificate is received by our board officially.
And as part of our Budget for Bharat series, NDTV Profit is traveling across the country to understand what India's real economy wants from this year's union budget. This time, Profit team went to Indore, a region that sits at the heart of India's soya ecosystem. From farmers to processors, the soya industry has been navigating price swings, export challenges, and rising input costs. So what are soya producers hoping the finance minister will deliver this time? Are they looking for policy stability, export incentives, or bigger support for oilseed cultivation? Bharat takes us to the ground zero in Indore to capture those voices and expectations. Let's take a look at this report made by him.
Welcome to NDTV Profit's Budget Exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry. And to give us more perspective, we are joined by Shrey Mittal. He's the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes, yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It is contain maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory. We are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soya bean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना relevant है और भारत का प्रोटीन क्या सोया है?
Yes, yes, definitely. You can say it. It contains maximum number of protein. After the COVID, Corona, we can say everyone conscious about their health conscious.
Right.
So basically, सब जनों को ये लगने लग गया कि हमको हमारी health conscious पे रहना है. हम कैसे अपनी diet को protein टेक फुल करें.
The soya protein, this is the OG proteins. हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. So right now the generation, what do they need to know about the soya?
These are natural kind of protein. We can say protein powders भी आता है, nutrition powder भी आता है, पर उसमें कहीं ना कहीं adulteration रहता है, mixing रहती है. ये जो है ये natural protein अपन इसको बोल सकते हैं. ये direct farmer से आता है. मैं आपको लेके चलता हूँ अपने next part में जहाँ अपना raw material intake हो रहा है.
Let's have. And Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
This is a raw material of soybean. तो उसी का ये husk है. जब हम raw material वहाँ देखेंगे वहाँ से हम ओपन करते हैं तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं उसको हम यहाँ पर स्टोर करते हैं. तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्परेरी स्टोर करके हम रखते हैं इसको यहाँ.
All right. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there has been a lot of support coming in the agriculture space. तो आपको क्या चेंजेस देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश की सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट नहीं, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं. आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री की सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं.
We saw the two processes there. What is this process?
This is we can say soya refine, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन जो कि हम देखते हैं मध्य प्रदेश, राजस्थान सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है. यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है.
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
Okay, so basically ये ऐसा है कि US गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल केक है वो इंडिया में इंपोर्ट हो. बस वो अपना हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है वो होता है नॉन GMO. उनका आता है GMO. नॉन GMO इज नॉन जेनेटिकल मॉडिफिकेशन. उनका केमिकल मॉडिफाइड रहता है. अगर वो इंडिया में आता तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी. प्लस जो हमारे लोकल प्लेयर्स हैं उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा. रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये इसका ये लगता है. तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको.
एंड श्रेय, बट द वेरी इंपॉर्टेंट थिंग इज बजट एक्सपेक्टेशंस. बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज ए इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए. हमारा आज भी एक्सपोर्ट जो बहुत कम है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनकी प्राइस कॉम्पीट नहीं कर पाते. डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना.
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें, वर्ल्ड वाइड देखें तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज हो रही है डे बाय डे. तो उसके लिए एक सोर्स हमारे पास ये सोयाबीन ही है जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है. तो वो तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे. प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है. इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखें.
Thank you very much, Shrey, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
Viewers, that's our on-ground report from Indore, the voice of soya cultivators, the OG source of protein. The soya industry is paramount for India's agriculture as it has multiple uses and the industry demands some export-oriented help. But apart from this, we've also brought and will continue bringing you voices of the Bharat from Jammu, Coimbatore, Kolkata and a lot more. So stay tuned to NDTV Profit as we continue to bring you a lot more news and updates and these special reports. Thanks so much for watching. This is Malika Mishra.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies. Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Now let's start the show, but before that we play a lot of guesswork with you to identify which company we are getting at KYC today. Also, let's give in the hints before you guess the company. It's a solar cell manufacturer. A lot of larger names have come up in the last 2 to 3 years. I'm just giving you one more hint on that, and it's one of them. The second one is they are beneficiary of China's cutting of the export incentives. Recently there was a news flow also on this, and a lot of these power related companies were rallying on the trade. Also, the third hint would be that the earnings is coming on January 22nd. Now, just to put it in perspective, in our KYC show, because of the Sebi's non-disclosure rules, and it's a silent period, we will not be asking the management about the overall numbers, but we will ask something on the industry as well. But remember to track this stock. In some days the earnings will also be coming in. Also, the company, let's make it the big reveal for the company, and that one is going to be especially the solar related company, and technical charts have also suggested that last 2 to 3 trading sessions the deliveries have also going up. That means some value buying is happening. The company in focus is Premier Energies. That's what we are talking about, and we will discuss more details about it. But let's just understand why we are actually getting this company in KYC. Of course, the numbers won't be discussed, but we'll discuss the industry dynamics. The first one is, what are the benefits coming in the China cutting in export rebates? Is the tide going to turn for the industry? That's one of the main questions to be asked. The second one, we are asking why Premier Energy is there in our show, is that the industry perspective would be there. Which side are the global solar prices going? Is it going up or is it going down? Is going to be a consolidation? A lot of questions are there, and a lot of viewers on KYC keep writing to me, and we will be getting these answers from the management. The second question is the raw material dependency on China. Will this come down, or will we still depend on China and our industry will suffer? That's a very big question to be asked. A lot of stakeholders ask us. That's what we'll be asking. Also, the fourth one, why we want to call Premier Energies, is what are the supply chain constraints? Have they improved?
Its ability to transform business models, unlock productivity, and of course, create lasting competitive advantage. We are also seeing the same themes continue from the past quarters in terms of our deal momentum, cost optimization, vendor consolidation, and a very clear shift towards AI-led transformation. In Q3, we also marked 2 important milestones for Wipro, which I'm very proud of. In December, we completed 80 years as a company. And in October, we celebrated 25 years of being listed on the New York Stock Exchange. In fact, these milestones reflect a legacy of strong governance, values, and integrity, a foundation of trust that continues to differentiate us with our clients, our partners, and our investors. Now, turning to Q3 performance. Our IT services sequential revenue at $2.64 billion grew 1.4% on a constant currency basis. Excluding Harman DTS acquisition, our revenue grew 0.6% in constant currency terms. In fact, growth was broad-based, with 3 of our 4 markets and 4 of our 5 sectors reporting sequential gains. Americas 1 delivered sequential and year-on-year growth, driven by strong performance in healthcare, consumer, and LATAM. Our Americas too saw a sequential decline. Europe grew sequentially in Q3, led by ramp-up of the earlier announced mega deal. We are also seeing good traction in the UK and the Western Europe markets. APMEA grew sequentially and year-on-year, led by India, Middle East, and Southeast Asia. BFSI continues to show strong traction with ramp-ups and new wins. Capco revenue was impacted by furloughs and remained flat year-on-year. Our operating margins at 17.6% expanded 0.4% or adjusted Q2 margins and 0.1% year-on-year. We also closed $3.3 billion in total contract value and $871 million in large deal bookings. If you recollect, last quarter, I introduced Wipro Intelligence. You would have seen the video, and if you remember that. It is our unified approach to delivering AI-powered transformation across industries that we serve. This approach is anchored on three strategic pillars. One, industry platforms and solutions. We are building consulting-led AI solutions across sectors. For example, platforms like Payer AI in healthcare, Net Oxygen for lending, and AutoCortex for automotive. These solutions help streamline operations, improve our customer outcomes, and open up new avenues for growth. Second, our delivery platforms accelerate AI adoption at scale. I talked about Wings last quarter. Wings brings AI into the heart of our operations, from application management to infrastructure support and business process operations. Vega, another delivery platform from Wipro Intelligence, adds AI-driven capabilities across the development lifecycle, be it software development lifecycle or product engineering development lifecycle, and from vibe coding to model tuning and data pipelines. Together, these platforms help our clients modernize faster, operate smarter. Third pillar is the Wipro Innovation Network. It connects our labs with partners, startups, universities, and deep tech talent around the world. This ecosystem helps us explore new technologies and build solutions for the future. In December, we launched innovation labs in 3 cities in the US, Australia, and Middle East, expanding our network, growing our global footprint, and strengthening our role as a trusted innovation partner. We are also partnering with client GCCs to help drive transformation and turn their cost centers into high-impact innovation hubs. Now, let me share 2 examples of the large deals that we have won leveraging Wipro Intelligence last quarter. First, a leading global education provider in the UK, which is expanding rapidly across markets, has chosen us as its strategic partner for a multi-year transformation. Their goal was to build a single, secure, intelligent operating model that can scale with their growth and improve stakeholder experience. Using Wipro Intelligence Wings, we will standardize all their core processes, embed automation and AI-driven insights, and helping optimize costs through their global delivery model. In my second example, a leading US-based fitness technology company has selected us for a multi-year transformation to accelerate their shift to a subscription-based wellness model, which is actually catching up, and support global expansion. Here, we will use both the delivery platforms, Wings and Vega, to embed AI and automation across their IT infrastructure and all of their core functions, helping drive efficiency, productivity, growth, and of course, customer experience. These engagements highlight a clear trend. Our clients are bringing us in much earlier and recognizing the step change in the way we deliver and innovate. I would now like to update you on Harman DTS. First of all, a warm welcome to all Harman DTS employees joining us. With this acquisition now complete, we have added engineering and AI capabilities that truly complement what we do. This, in fact, strengthens our engineering global business line and helps us accelerate AI-driven product innovation for our clients. In fact, this integration also opens new regions and high-growth industries and allows us to take on larger and more complex transformation programs. As our teams come together, we look forward to entering new markets, building deeper client relationships, and turning innovation into long-term value. Finally, the guidance for Q4. In Q4, we are projecting sequential IT services revenue growth of 0 to 2% in constant currency. With that, I will hand it over to Aparna for the detailed financials. Thank you.
Thank you, Srini. Good evening, ladies and gentlemen, and wish you all a very, very happy new year. Let me share a quick update on the financial performance for the quarter ended 31st December 2025, after which we will open up the floor for questions. Our IT services Q3 revenues grew 1.4% sequentially in constant currency terms and 1.2% sequentially in reported currency. It also grew 0.2% year on year in reported currency. Our constant currency revenue growth numbers included 0.8% contribution from the Harman DTS acquisition that was closed in Q3 of 26. Our operating margins for the quarter was at 17.6%, an expansion of 40 basis points over the adjusted operating margins of for Q2. It also expanded 10 basis points on a year-on-year basis. I would like to highlight that this is one of our best margin performances in the last few years. As we move into Q4, we will need to factor for the incremental dilution of Harman DTS acquisition. Our endeavor, as always, will be to maintain the margins in a similar band that we have delivered in the last few quarters. Adjusted net income for the quarter was at rupees 33.6 billion rupees, and adjusted EPS was at rupees 3.21. This is an increase of 3.5% sequentially and flat year on year. Moving on to our market unit and sector performance, I will share some of the commentary. All the numbers that I will share are in constant currency. Like Srini said, this has been a fairly broad-based performance with 3 of our 4 market units growing quarter on quarter and 2 of the 4 market units growing year on year. Americas 1 grew sequentially by 1.8% and grew 2.8% on a year-on-year basis. Americas 2 declined 0.8% sequentially and 5.2% on a year-on-year basis. Europe grew 3.3% sequentially and declined 4.6% on a year-on-year basis. APMEA grew 1.7% sequentially and grew 6.6% on a year-on-year basis. Now for the sector performance. BFSI grew 2.6% sequentially and 0.4% year-on-year. Health grew 4.2% sequentially and 1% year-on-year. Consumer grew 0.7% sequentially while declining 5.7% on a year-on-year basis. Technology and communication grew 4.2% sequentially and 3.5% year-on-year. EMR declined 4.9% sequentially and declined 5.8% year-on-year. You can note that 4 of our 5 sectors grew sequentially and 3 out of our 5 sectors grew year-on-year. Further, Capco growth was flat on a year-on-year basis for the quarter. Before I move on to other financial parameters, I would like to draw your attention to 2 specific one-off charges that we have recorded in our P&L for the current quarter. These charges are not included in our IT services segment operating margins but have impacted our net income and EPS. First is an increase of 302 crores for gratuity expenses due to the implementation of the labor code. And second is regarding a restructuring exercise that was completed during the quarter, and the impact of this is about 263 crores. I would like to confirm that we've now completed the restructuring that we want to and do not anticipate any further charges. Our operating cash flow continues to be higher than the net income and stood at 135% of our net income. Our gross cash, including investments, was at $6.5 billion as of 31st December. In Q3, our net other income rose 15% sequentially. Accounting yield for the average investments held in India was at 7.2%. Our effective tax rate was at 23.9% for Q3/26 versus 24.4% same time last year. In terms of guidance, to reiterate what was stated by Srini, we expect our revenue from IT services business segment to be in the range of $2.635 billion to $2.688 billion. This translates to a sequential guidance of 0 to 2% in constant currency terms. Our guidance includes the incremental 2 months of revenue from the Harman DTS acquisition. It is impacted by fewer working days in Q4 and delay in ramp-ups in some of the large deals that we had won earlier this year. Lastly, I would like to share with you that in our recently concluded board meeting, the board of directors have declared an interim dividend of rupees 6 per share. With this, the cash distributed to our shareholders during the current financial year will be in excess of $1.3 billion. And we've been able to significantly exceed the minimum floor in our capital allocation policy for the block for the year ending FY 2026. With that, I'm going to hand this over to Nisha for Q&A.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want, watch budget for Bharat. Only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026. The growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school.
Welcome to NDTV Profit's budget exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry, and to give us more perspective, we are joined by Shrey Mittal. He's the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It is contain maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory. We are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soybean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना रेलेवेंट है और भारत का प्रोटीन क्या सोया है?
Yes, definitely. You can say it contains maximum number of protein. After the COVID, Corona, we can say everyone conscious about their health conscious.
Right.
So basically सब जनों को ये लगने लग गया कि हमको हमारी हेल्थ कॉन्शियस पे रहना है, हम कैसे अपनी डाइट को प्रोटीन को इंटेक फुल करें.
The soya protein, this is the OG proteins. हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. तो right now the generation, what do they need to know about the soya?
These are natural kind of protein. We can say protein powders भी आता है, nutrition powder भी आता है, पर उसमें कहीं ना कहीं adulteration रहता है, mixing रहती है. ये जो है ये natural protein अपन इसको बोल सकते हैं. ये direct farmer से आता है. मैं आपको लेके चलता हूँ अपने next part में जहाँ अपना raw material intake हो रहा है हमारा.
And Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
दिस इज़ अ रॉ मटेरियल ऑफ सोयाबीन, तो उसी का ये हस्क है। जब हम रॉ मटेरियल वहाँ देखेंगे, वहाँ से हम ओपन करते हैं तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं उसको हम यहाँ पर स्टोर करते हैं। तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्प्रेरी स्टोर करके हम रखते हैं इसको यहाँ पर।
Alright. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there's been a lot of support coming in the agriculture space. तो आपको क्या चेंजेस देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश की सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट है ही सही, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं। आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री की सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं।
We saw the two processes there. What is this process?
This is we can say soya refine, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन, जो कि हम देखते हैं मध्य प्रदेश, राजस्थान, सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है, यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है।
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
ओके, सो बेसिकली ये ऐसा है कि यूएस गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल केक है वो इंडिया में इंपोर्ट हो। बस वो हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है, वो होता है नॉन जीएमओ, उनका आता है जीएमओ। नॉन जीएमओ इज नॉन जेनेटिकल मॉडिफिकेशन, उनका केमिकल मॉडिफाइड रहता है। अगर वो इंडिया में आता है तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी। प्लस जो हमारे लोकल प्लेयर्स हैं उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा। रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये इसका ये लगता है। तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको।
एंड श्रेय, बट अ वेरी इंपॉर्टेंट थिंग इज बजट एक्सपेक्टेशंस। बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज अ इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए। हमारा आज भी एक्सपोर्ट जो है बहुत कम है एज़ कम्पेयर टू यूएस, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनकी प्राइस कॉम्पीट नहीं कर पाते। डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू यूएस, ब्राज़ील, अर्जेंटीना।
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें, वर्ल्ड वाइड देखें, तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज़ हो रही डे बाय डे। तो उसके लिए एक सोर्स हमारे पास ये सोयाबीन ही है, जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है। तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे। प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है। इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखते हैं।
Thank you very much, Shrey, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sebi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets old industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup.
Picture this, you needed to buy shoes. Everyone needs shoes, right? So you went to the shop around the corner and you got what you thought was a decent pair. You're happy. Till you meet a friend who tells you that that same pair of shoes is available at a discount of 50% at the factory outlet barely a kilometer away. Man, that's gotta hurt, right? Well, in that scenario, at least you have a good pair of shoes. But what happens when you pay more tax than you should? This is Moneywise on NDTV Profit, and I'm Alex Matthew. And today, we're talking about tax hacks that could save you lakhs. My guest today is Abhishek Mehta, the founder of Investa Capital. Abhishek, thanks so much for taking the time.
Thank you.
And you're going to give us a few secrets of the trade, tricks of the trade, so to speak. And we're going to run through sections and we're going to make it pretty simple for people to understand.
Right.
So what are we starting with?
So the first section I think every individual should know is about section 54 because like a parent said कि सर पे छत होनी चाहिए और आप छत कभी ना कभी you sell. So that is one section which every Indian should know is
to move to a better chhat, effectively.
Yes, or you buy a new better house, you keep buying a better house. So section 54 is very, very important and critical to know because this section tells you basically if you have a residential house and if you sell that residential house and buy a new one, the entire capital gain tax gets exempted. Now there is an upper limit of 10 crores, but mostly all Indians will fall below the 10 crores. So if your capital gains is less than 10 crores, you can go and claim a section 54. The only preemptive is that you should buy the new house before either 1 year before selling the new house or 2 years after you sell your old house. And if you're going into an under construction building, so you have 3 years to pay that money from the money which you have got from selling the house. So that's the only catch which you have to ensure that you are within the limits to claim the exemption.
Isn't this applicable only to the first house that you buy? To one house? It can be any house that you buy.
It can be any houses. If you have 100 houses, you go and sell 100 houses, you buy new 100 houses. So the money keeps churning within the residential property only.
I always thought it was available only for the first,
so
to the second house that you buy.
Yeah, so there's another section which is section 54F. It's on that you can buy maximum 2 houses.
Oh, but explain that.
So what does section 54F is? Basically, if you sell anything other than residential house. So if you sell your mutual funds, you sell your stocks, you sell unlisted shares and all those stuff, and you go and buy a residential house, then you don't have to pay the taxes. You can claim your capital gains exemption by filing under 54F.
But in the case of 54,
yes,
you can sell the house that you're residing in, or if you have an existing house and you are renting out a second house, you can sell one of those houses.
Yes, so basically you have to sell the residential house and then buy a new one. You keep buying and selling. If you sell one, you can buy one. It cannot happen that you sell one and buy 2.
Okay, you sell one and buy one. Understood.
And that's how you can keep claiming section 54 over and above, like you can claim it 100 times. And only the capital gains has to be reinvested. So if I have bought a house for 8 crores, I sold it for 10 crore, I just need to reinvest the 2 crores to claim the exemption. Whereas in section 54F, I need to invest the entire proceeds.
Oh, that's an interesting cash. And are the limits different in 54F?
So 54 is 10 crores of the capital gains and 54F is 10 crores of the proceeds, sale proceeds.
Okay.
So that way probably your gain in 54F would be 2 crores, 3 crores, probably
whatever
5 crores, whatever it is. But these are very two key sections. Lot of people have seen they fail to claim section 54F because you keep saving your money to buy a house. Eventually everybody needs a house. So you keep saving into mutual funds, you save into stocks, and one day you sell those things. And government has given you that option that if you sell your shares, mutual funds, and if you buy a property, claim the exemption. You don't need to pay the taxes.
You said that there is a window, right? Is this applicable on 54F as well?
Yes, both
So 1 year
cases.
before and 2 years after.
Yes.
In the case of an under construction property, you get a little more time.
3 years.
But there is a different account that you put the proceeds into, isn't there?
Yes, right. So before you file your returns, once you have sold the house, and before you file your return, which is usually 31st July, you have to save that money into a capital gains saving account. You have to go to a public sector bank and open a specific account which states a capital gains savings account, and you have to keep the money there. If you forget it, then you cannot claim section 54F.
Okay.
Okay, if you go and file your return on 1st August and you say that, look, I have just deposited on 1st August. No, you cannot.
Technical question, can you claim it in anticipation? Like, for example, here's a situation, hypothetical situation, where in January of 2026, another month and a half for the end of the financial year, right? So, no, 2 months and 2.5 months effectively, right? So, if I anticipate that I will buy a house in May of next year, that is the financial year, in anticipation, can I claim, say, that I've sold mutual fund units, I've parked it in this special bank account?
Yes.
And in my returns for this year, can I say that I've set it aside with this purpose?
So once you have deposited the money, the bank will not release the money till the time you give them the certificate of payment to the builder. Okay. And if you want to take out the money, suppose you drop the plan, ki Abhishek, I'm not buying a property, then you need to go to your ITO. You have to go to your assessing officer, take a letter from him that I have paid all my due taxes on whatever amount I claimed as an exemption. Then they will give you a release letter to the bank that, okay, release the money. So
can you use those proceeds only to pay the taxes?
You can use any proceeds.
No, I'm saying whatever you had in that account.
Yes, you can use that.
You can use that.
Yes.
Okay, so we've talked about what to do when you have a house or when you need to book out your investments in order to buy a house. And this is all capital assets, right? It can be gold, silver, it can be everything, right?
Yes, anything.
Okay. Beyond this, what else is there?
So for businesses, people who are doing businesses, there is a very good section called as section 44AD.
Okay.
Now what is this? This is called a presumptive taxation section. So if you have sales in a business up to 3 crores, you can file your income tax return without preparing a balance sheet and P&L. You have to show 6% as profit.
Okay.
So whatever digital sales has happened, wherever you have received money digitally, you can show it as 6% of the profit.
Is there some logic, the 6%?
So mostly, basically the IT department thought that if somebody is doing a business, they would at least earn 7-8% return on their business. Or else why would somebody do a business?
Right.
There might be certain businesses where the margin is very less, but those are more volume business.
Right.
If I'm doing a 2-3 crore kind of business, at least I'll earn 8%.
Sure.
So now what does this do is, if I'm doing a sales of 2 crores, 6% becomes 12 lakh rupees. I'll pay 0 tax in the new regime.
Okay.
I'm doing a business of 2 crore and I show it 6%.
Most people know this. If you have 12 lakh rupees of income in the new tax regime, you pay no tax.
Yes.
Right?
So 2 crores sales and I pay 0 tax under the new regime.
Okay. And this is, now what do you fall under? What type of taxpayer do you fall under? This is for business owners.
This is for individuals, HUFs and partnership firm. All three people can use this section 44AD. And most important, it comes you out of the biggest hurdle of preparing your balance sheet, P&L and accounting, all those, tensions and problems you come out of that.
It's called
presumptive taxation. For businesses, people who are dealing in goods basically, who are into trading, manufacturing of goods.
So in this case, you're paying GST first, right?
Yes, right. You will be paying GST over and above your sales.
Sure. Okay. So in an example, if you're talking about 2 lakh rupees,
yes,
then you're talking about say 18 or say 36 lakh rupees. Suppose you're.
So if my turnover is 2 crores, I'll probably end up.
Sorry, 2 crore rupees, then 36 lakh.
I'll be end up paying, if I don't have any GST purchase, I will end up paying 36 lakhs as GST to the department. But that the customer will give you.
Right.
And customer will also get the input tax credit on that sale, on that purchase basically. So this is a very good section which people should use and directly file their returns. Even if their profit is 20%, government will not ask.
And if your income is or your sale is over 2 crore, which effectively takes you beyond that 12 lakh number on that presumptive number, it's still beneficial because you're paying taxes based on the new tax regime.
Yes. So the upper limit is 3 crores.
Okay.
If you have more than 3 crores, you cannot go for this presumptive taxation.
Okay. There is probably more to that, right?
Yes.
It has to do with professionals, I would think.
So there are certain 7-8 professions which income tax has said, like doctors, lawyers, CAs, engineers, who can file their income tax return under section 44 ADA. Again, presumptive taxation, but there are 2 points here. The upper limit is 75 lakhs. So only people who are earning up to 75 lakhs can go under this section. Second, you have to show profits as 50% of the revenue.
Okay.
So if I'm earning 50 lakhs, I have to show profit as 25 lakhs.
Sure.
Which is generally the case in these professions, because they don't have much of expenses in the individual kind of. So if there is an individual doctor, an individual lawyer, he wouldn't have about 50% of the expenses.
Sure.
But he can go for this presumptive taxation and save a lot of taxes, and again, no hurdle to prepare their books of accounts.
So, but tell me something, it is something that we come across a lot. Look, as salaried employees, you always look at professionals and say, hey, you guys can claim quite a bit in the way of expenses, right? So, suppose you buy a car, you effectively need that car for your regular daily business.
Yes.
And it can be a car that is worth, say, about 20 lakh rupees, right? And you can then claim depreciation over a period of time as a cost.
Right.
And so it's a substantial cost that forms a part of your cost for the year, right? And you add things like that to your list, you can very easily hit more than 50%.
So again, anybody has to do a cost benefit analysis. And the biggest cost benefit analysis, do you want to go into a hurdle of preparing your books of accounts? Okay, because accountants have got expensive. It's not easy. You have to put down all your transactions. Because of UPI, I have seen number of transactions increasing from 500, a simple professional guy having 500 transactions, that has increased to 3,000. Because people are doing 20, 30, 40 rupees also UPI transactions.
Sure, and you have to explain all of that.
Explain all of that, prepare the books of accounts, file it. So better if there is you need to do your cost benefit analysis, but I would still prefer presumptive taxation because it gets me out of the hurdle of preparing books of accounts.
If somebody were to be claiming these expenses, then what kind of advice would you have for them? In that sometimes frivolous expenses can also be claimed, like Abhishek.
Yes.
So therefore, what advice would you have?
So mostly, see, expenses which are related to business, only those can be claimed. So if you are going to your restaurant, hotel with your clients, you need to have all the bills in your hand. So that when the assessment comes, if there is any scrutiny, they require all the bills and the date of payment made on those bills. So I have seen a major gap in this thing because people
What
spend
are some
money.
of the weird things that people have claimed in your experience in these kind of expenses?
So mostly vacations, foreign vacations people take, they claim it as business expense. A lot of time people claim their marriages also under business expense. They show it as exhibition, they show it as event happen for the business. so all those expenses also people put it in the business to claim the GST also and to claim the outgoing as an expense. But income tax has become very vigilant now and they know where the marriages are happening. They know each and everything. So it's not that easy nowadays to claim all those things. There used to be an era, but with AI and everything, it's now difficult.
It's now difficult. Okay, so bear in mind that you should claim only what you're spending for your business. It's getting tougher, and the tax department is even digitally keeping your footprint in view, right?
In fact, there was a nudge campaign which income tax department, just a nudge, and people, 2,800 crore was recovered only on the nudge campaign.
What was this about?
Basically, income tax department just sent an SMS to everybody who had claimed a refund that your income tax return is on hold. If you want to revise it, You can go and revise it. So all those people who tried to play around, just on that nudge SMS, 2,800 crore was recovered by the department. So if department starts scrutiny of each and every return, the amount of money the department will recover is enormous.
So, and here it must be said, we're talking about legitimate ways in which you can save tax. So what's the next one on the list?
So a lot of people don't know that if I'm getting a rental income, okay, in the new regime also, I can claim the interest expense of the home loan which I have taken, or if I have taken any loan on that property.
Oh.
So whenever I buy a property, I make sure that I take a home loan.
Right.
Reason being, if I'm getting a rental income and if my interest is going out, the both get set off and I don't have to pay any tax.
But okay, so this is a conditional thing where in the old tax regime, under section 24,
right,
you're allowed to have up to 2 lakh rupees
of loss
of interest expense.
No, you can claim the entire interest expense, but only if there is a loss in the business, in the rental income, you can claim up to minus 2 lakhs.
No, okay, no. So let me qualify.
Yes.
Most people will be aware of section 24, which is not related to loss of rental income, right? It is a pure provision for interest cost on a home loan, right? Which allows you to claim up to 2 lakh rupees. Per year.
Yes.
Now, what you're saying is that even though deductions broadly are not available in the new tax regime,
yes,
there is a provision that allows you to set off if you've earned a rental income.
Yes.
If you've earned, or rather, if you've expended on interest to that same amount, you can set off your rental income.
So if I got a 12 lakh rupees rental income,
sure,
I will get firstly a minus 30% standard deduction.
Okay.
That will be first minus 30%, which will come to about 4 lakhs. Then whatever property tax I have paid for that property, that will also get minused. And if I have paid any interest on that property, I have taken a home loan and paid any interest, that amount will also get minused. And eventually, mostly I'll go to up to 0 rupees.
So this is assuming that you don't have any other income?
No, if I have any income, this is an
How
expense
do you have standard
which you
deduction on rental income?
There is a 30% standard deduction given by the government because you do some repairs on your rental home. If you have you give some money to the broker, you pay the maintenance bill of that property. So you have certain expenses while maintaining that property.
And how do you claim all of this?
So you don't claim all of these. You can only claim a standard deduction of 30%.
Okay,
so
understood.
if I'm getting 100 rupees, I'll claim standard 30 rupees.
So no, say that again. So you have rental income. Suppose you have rental income of 12 lakh rupees,
Yes.
1 lakh rupees per month.
Yes.
What are the deductions that you can claim from that? This is a new tax regime.
Old also, new also.
Okay.
In both you can claim.
Standard deduction 30%.
30% standard deduction.
Yeah.
So my 4 lakhs will go roughly about.
Yeah.
Then whatever property tax I have paid, that will also get minus. Then whatever interest I have paid, that will also get minus.
Interest on that, okay.
On that property.
Only on that property.
Only on that property. You cannot claim interest which you have paid on your self-occupied property for the rental income. So whenever anybody is investing with the purpose of earning rental income, they should or they can take a home loan.
Interesting.
Because that interest will get set off.
Okay.
Against that interest income.
That is certainly interesting. Let's talk about what else there is in the list.
So.
And there you go. It's fine. These are. It's important for you to look at the list because these are sections, right? So what's next?
So HUF is very important. It is the most underrated, I guess, tax structure which Indians have been using.
I must state that we've had a conversation, multiple conversations on this show and others on HUFs.
Yes.
And before we go further in this from a tax lens, it might be incredibly attractive.
Yes.
But to everybody tuning in, bear in mind that there are factors beyond taxes that you need to consider. And we've had a conversation on this, but do look up the complications that could emerge with inheritance and transference of property down the road. So there are advantages, but there are disadvantages. Weigh the pros and cons before you take a decision. We're talking about the advantages now.
Yes. So HUF basically is an Hindu undivided family.
Yes.
So any Hindu, Jain, Sikh, Buddhist can create an HUF. What HUF will help you to do is, it will create a separate PAN card. A separate entity will be created.
Right.
The benefit of that will be, you will get a slab rates on all your income. So what I usually do is, all my investments are usually done, financial investments are done through an HUF.
Okay.
Because I can claim all the exemptions, basically all the slab rates.
On a different PAN.
On the different PAN, because I come under surcharge.
Sure.
So I pay a lot of 10-20% surcharge on whatever income I generate, my wife generates.
Right.
So all my investments, financial investments, are done through the HUF.
Okay.
I can claim 1,25,000 rupees exemption, which the long-term capital gain tax gives under 112A. I can claim ATC, I can claim ATD.
So all the benefits that accrue to you as an individual accrue to the HUF as well. So it's basically splitting off your assets and using one more additional structure to, to transfer your assets.
Yes. So all your dividend income, your interest income, your debt mutual funds, your capital gains on the mutual funds, if you are under surcharge, can be parked with the HUF. Coming on the disadvantage, that is why I'm again and again saying your financial assets should be parked, because those are very easy to liquidate at any point of time.
So not your physical assets.
Not your physical assets, because then those complications comes with, inheritance, transmission and all those things. But all your financial assets can easily be parked with an HUF, and you can claim the slab rates. If you have, suppose I made an FD of 25 lakhs or probably 30 lakhs. What is the interest income I'll earn? 2.5 lakh. The entire interest income is tax.
So fascinating. And interestingly, I was having a conversation with a gentleman the other day, and I was complaining about certain aspects of how much tax I pay. And he said, "You should do an HUF." I said, "Sir, my name is Alex."
Yes, so it's Hindu, Jain, Sikh, Buddhist. Only these 4 people can create an HUF, and they can do their financial investments in that account.
We both laughed for some time. But having said that, let's talk about the others in your list.
Yes. So one thing is, if your children are now 18 plus, earlier mutual fund unit gifting was very difficult. Now government has really simplified. You can gift your mutual funds to your children. So if you are planning to redeem, probably today or in the near future, you can claim 1,25,000 as exemption. You can gift some of your mutual funds to your children's and redeem it there.
Right.
So what will happen? The capital gain will accrue to your children.
So if you intended to transfer it to them anyway, you can actually gift it to them, in that if I'm the transferer or the gifter, then I don't pay capital gains.
No.
And if my child is receiving it, when the child sells that, they will then have to pay capital gains.
Right. So relatives receiving any gift is completely taxed.
Is there a limit?
No, there's no limit. Even 1,000 crore can be gifted, and the relatives doesn't need to pay any tax on that. And whenever they will sell that, probably property, mutual fund, stocks, the tax will be on them.
Sure.
So they can claim that 1,25,000 exemption, and probably if you are under surcharge, again there will be no surcharge. And you can save your taxes.
How do you gift mutual fund units?
So basically you have to go to MF Central website, or you can go to AMCs also, and you can fill up a form for transferring of units under gift. And now it is very easy and very digitally possible through the MF Central website, which NSDL, CDSL and CAMS, Carvi all have come together and made it.
So very interesting. All right. There's one other thing, and this is from the perspective of people leaving the country and becoming NRIs, right?
Yes.
We were discussing just before the start of this program. There is an interesting available option for them to not pay tax on investments. How does that work?
So before we talk about NRI, let's just what is NRI? Okay, people usually get confused with citizenship and NRI. See, citizenship is different. You, me, we are Indian citizens.
Yes.
India doesn't allow dual citizenship.
Sure.
So if I become a citizen of America, I have to drop my India citizenship and take an OCI card. So concept of citizenship is different. Concept of NRI, the resident and non-resident, is different. How does a person becomes an NRI, which is a non-resident? If he stays in India for less than 182 days, he becomes an NRI. So lot of rich people, they are sending their kids to Middle East. Lot of people who were earning money from their consulting income, they were earning money through their YouTube and all, are moving to Middle East or other countries where India has signed DTAA with
What
them.
is a DTAA?
DTAA is basically a double taxation avoidance agreement.
Sure. So
that the tax should not be paid in both the countries.
Sure, fair enough.
So what people are doing is they are moving to Dubai or other countries Singapore where DTAA is signed. Now what happens, DTAA says that the taxation will be taxed in the country in which you are residing.
Domicile, yeah.
So
Okay.
if I am staying in Dubai, I will pay Dubai taxation.
Which there is no tax in Dubai.
And there is no tax. So if I am a Dubai resident, I have invested into Indian mutual funds, there will be no tax on me.
Even if you sell those units?
Even if I sell those units.
In that particular year, if you have, if you're non-resident Indian,
yes,
and you're domiciled in the Gulf,
yes,
which is effectively the UAE,
yes,
you will not pay tax.
Right.
Very interesting.
And obviously, because you are an NRI, your entire global taxation is not taxed in India. So if I'm earning anything in Dubai, I have done some investments from Dubai. So all those are tax free. Along with that, whatever mutual fund, stocks, money I'm earning, that is also tax free.
Interesting.
So that is why a lot of people, rich people are, sending their one kid to UAE or other countries to get this tax
and
benefit.
even people, I think, who can work from anywhere are contemplating doing this. It's quite interesting.
Mostly YouTube creators, because they get money from US. They get from a US entity. So they can get the money anywhere.
Yeah.
So they move to Dubai and earn for free. You would have heard so many football players, because they go and play across various countries. They go to countries where the taxation is zero.
Sure. Yeah.
So that is
so we've talked about several options, and I think it's been an interesting conversation. Thank you so much, Abhishek, for giving me and my viewers a few ideas to think about.
Thank you so much.
All right, well, that brings us to the end of this edition of MoneyWise. Let us know what you think and stay tuned. This is NDTV Profit.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit. The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it. So that
IHCL in focus. It's set to acquire a 51% stake in Bridge Hospitality, bringing the boutique luxury Bridge brand into its portfolio as it accelerates expansion in the experiential leisure segment. This deal follows IHCL's recent controlling stakes in Ank Hotels and Pride Hospitality, significantly strengthening its mid-scale and leisure segments. To understand more about it, I'm joined by Puneet Chhatwal, MD and CEO at IHCL. Thank you so much for this conversation with us. Let's start by understanding why Bridge Hotels, why this controlling stake, what's the strategy there?
Good morning. Thank you for having me. I think this is a natural consequence of the partnership that we had formed with Ank and Pride. And we had the Bridge portfolio already on our distribution platform. And given the way the mid-market is expected to grow in India because of the rising middle class as well as the disposable income connected to it, which we've all seen with the rise in domestic tourism, I think it helps us to take a leading position both on the mid-market segment in leisure, in business, as well as in upscale segment through the Bridge brand.
What is the kind of addition to the top line you're seeing, Mr. Chhatwal, as a result of this acquisition and the other two that you mentioned as well?
You see, at the moment, we have done the acquisition, which will be complemented with asset management efforts. So the Bridge acquisition should give an addition next year itself of 100 crore on the top line. Currently, the portfolio performs at an EBITDA margin of around 38%. We expect that with the operational synergies to go up to 40%. And I think given our distribution network, given the synergies in similar markets that we have, we should be able to drive higher value both at a brand level as well as at a revenue level. I can give you an example. In a city of Banaras, where we have the Taj Nadeswar Palace, we're doubling the Taj Ganges inventory, adding another 100 rooms, should come online by the next 10 days or 15 days. Now we have the Bridge Rama. A few days ago, we announced the opening of Avantika, also on the Ganges, also on the Ghats. Then we have the Tree of Life, and we have a Gateway and a Ginger under development. So how we go into the depth of each of the important top upcoming micro markets in India has been a part of our strategy, and covering and addressing all customers in all segments is playing out very well for us.
Puneet, Neeraj here, I just wonder if this will become the template wherein large behemoths like your group will get enough opportunities to acquire either vertical specific or region specific brands at a good IRR price for you to expand while incurring lower costs.
Absolutely right. I don't know how you got insight into it, but maybe because you've been following us closely, Neeraj. I think important for us was to get our strategy right, number one. Number two was the capital structure needed for it. Then eliminating debt, building a good cash position, and then as and when good opportunities come up for inorganic growth, to deploy that cash cleverly so that you are not actually diluting the current margins or the growth in the top line.
And would it be fair to assume, I mean, because these acquisitions per se, when I look at the numbers relative to your size, are not very large. So is this a string of pearl strategy, and do you believe that there is more in the offing over the course of the next 12 months, 2026, for example?
Yes, for sure. I think it's a very interesting question. The one we did earlier with the Ank and Pride was to convert 90% of that portfolio, or 85 to 90, whatever the number would be at the end of this calendar year or the next financial year, to Ginger brand. That would have given, or that will give Ginger a scale of 200 plus operational hotel in a 250 hotels portfolio. So we took 20 years to maybe get to our first 50. And then within 1 year, we just scale up. So scaling up a brand in this kind of segment is fundamental to the long-term success of the brand. And some of that may not add so much to the top line or bottom line, and some will. Then you try to use asset management initiatives to reposition that product within the same market. Then add, our F&B offerings like Cumin. Take the F&B offerings that the partners have done, and then you synergize to get the brand on a very fast track growth, so that 250 plus then goes on to become 500 or 700 in the next 5 to 10 years.
What is the kind of fundraise that will be required, if at all, for this kind of growth that we're talking about? I know the name of the game is asset light, but nevertheless, is there any fundraise on the anvil?
Not at the moment. We are sitting on a very healthy cash reserve. So I don't think we would need any kind of fundraise. We are still doing capital heavy growth also. We just opened 2 hotels in Ekta Nagar, which have been built with our own 100% investment without debt. We are doing a lot of other projects in Ranchi, the Taj, or in the Northeast. We'll be doing Kaziranga. With our own capital. We are building the 2 islands in Lakshadweep. We are opening in a hybrid model the Taj in Frankfurt in a couple of months from now. So I think the combination is the key. Finding the right sweet spot between the capital heavy and capital light. We've been guiding the market on that. We started with 50-50. Today we are at 35-65, 35 being capital heavy.
And that continues in that vein as well?
That continues in that way, because I do believe in order to build strong brands, you have to do some kind of brand enhancing and flagship hotels. And we have often spoken about it on your channel. Look at what Ginger Mumbai Airport has done for the Ginger brand.
Yeah. Just wondering if the expansion plans now include a global footprint as well. Are we back at that place right now? Or the focus will be domestic?
Back at that place. So Tamanna, on the 21st of December, we signed a very large 300-room hotel in Cairo, which will be a flagship Taj. So we'll keep doing selective Taj development in key gateway locations across the globe. And Cairo is a great addition for us in that part of the world. We opened last week the Taj Paro in Bhutan, which will be followed in the next week with Taj in Phobchika in Bhutan. So I think having that dominance in the Indian subcontinent and selective presence in international markets with a capital light model or a hybrid is the way forward. We are definitely not going into some kind of acquisition of single assets like we had done 20-25 years ago. That's not a part of our strategy.
Puneet, I'm just taking a leaf out of that. I'm tempted to ask you. You've now maintained that post-COVID, the sector has moved from being cyclical to structural. Does this structural nature of the India business give the group and you the ability to reimagine a really large global Taj brand over the course of the next 10-15 years? I mean, we have the Marriotts, we have IHCs, we have various other brands. None of them are from India. Is your brand set to become this over the next 10 years, wherein you will not be just in gateway locations, but in multiple other locations?
Thank you, Neeraj, for that question, because it's a very interesting take. Till 7-8 years ago, from a valuation perspective, we did not feature even in the top 100. And I would say it would be fair to say we did not even feature in the top 150. But since the last 2 years, we have been consistently being rated between number 4 to number 7 from the real true hospitality companies, if we take out the casino-driven companies. And I think it would be fair to assume that if we continue in a very disciplined way, like we have done in the last several years, in communicating our strategy and walking the talk with that follow-ups, despite all the headwinds that come, there is no reason why we should not get into and become stable at the number 1 to 5 position in the world. 1 or 2 from a valuation point of view maybe unrealistic, but I think if we get to stabilization between 3 to 5, it would be a very big step. And as you said, 10 years down the road, or 50, if we could go further up, why not?
Just, since we have you in the middle of January in this conversation, what is the outlook for 2026 that you're seeing, the kind of appetite you're seeing for luxury and the expansion plans?
Our guidance has always been depending on what your base level is. So like for bridge, the average yield is around 27,000 rupees. So you cannot have 20% growth on very high levels. So I think a double-digit growth on the top line remains very realistic for 2026, 27, and maybe even 28, as far as we can see it based on our like-for-like and not like-for-like growth. And that double-digit with the right amount of flow-through and conversion should keep adding to attractive EBITDA and PAT and free cash flow growth. So all in all, I've always sounded optimistic. The same is today. More I cannot say because we're in the silent period, but the sector outlook for hospitality remains positive as demand continues to outpace supply despite all possible headwinds one could have had, from an airline accident to operations Indore to the flooding to the landslides that we have witnessed in the first 9 months of this financial year.
Thank you so much for that, and good luck for the rest of the year. Puneet Chatwal there speaking about what the year is looking like, and of course complete controlling stake in Bridge Hotels as well.
Hello and welcome to NDTV Profit, and now joining us from Union Bank's company's management, MD and CEO Ashish Pandey, who is joining with us. The first question is, of course, on the earnings front, the loan growth, that's been around 7% growth coming in, but earlier the guidance was between 9 to 10%. What specific strategies is the bank implementing to get these numbers up going ahead?
Yeah, thank you so much, Sharadji. Good morning to you, and good morning to all the viewers, as well as the happy festivities to all. Coming to your question, actually, yes, I agree. The growth which you are seeing from the quarter. But let me share with you some of the data points. So if we take the RAM, it is sequentially quarter to quarter, it is 4.1%, which is very robust. Now coming to the corporate book, you must be seeing there is a good, the increase in the corporate book in the last quarter. Now, let me share with you some of the insights. We had actually 20,000 crore of IBPC, actually 23,000, but one is maturing in the month of January. So around 20,000 we have shed it off, which was at the lower yield in this quarter. Point number one. Point number two, we had around 10,000 crore of short-term loans, which we have converted to long-term loans. Now, if you take, the around 30,000 crore and you add it to the growth which we have shown, because it is, reshuffle between the corporate book itself. So I think with that, you will be seeing the double digit. So I believe that the growth which we have shown quarter to quarter, and I believe it is sustainable, and we'll be going forward in similar lines only.
All right.
Still in the corporate book, we have around 24,000 crore of undisbursed, which is going to take place in the current quarter.
And Ashish ji, have you seen the CASA deposits? That has risen very sharply in the month of December, the quarter I'm talking about. What contributed to this?
Yeah, I think, it is a very key point as of today. And on the deposit, we had a very specific strategy within the senior management. And certainly it was, conveyed down to the branch level. So specifically, if you take the deposit around 40 to 45,000 crores, which was on the high cost, which we have shed it off. Now, coming to the CASA, it was 15,000 crore of increase in the quarter. And if we take the retail term deposit, which was our focus area, which we have grown by 9,100 crore. We had taken, some product we have launched during this quarter. We had some specific structure we have created in our bank, along with some 1,600 people and with a separate department. And we had some MOU with various corporates, various private as well as PSU corporations and all, and we could accrue good salary accounts. So I believe this is only as an example I am sharing with you a few. But we had a very, very specific strategy, very specific pockets for increasing the CASA, and we are of the firm belief that going forward, you will be seeing the growth in the CASA, even the ratio as well as in the absolute terms.
All right, and Ashish ji, there are different segments, the retail, MSME and corporate. Which of these segments would be the primary drivers going ahead?
Yeah, I think the ramp, typically we are growing very well since beginning. The more of the issue was, on the corporate side, but then corporate side is fully in track, and the figures which we have already shown, I think it is well placed for the next quarters and other further also. But coming to the RAM, you are very, actually very specifically you have asked. So retail, agriculture and MSME. Now we have made certain schemes in all the three, and certainly, it has to be activation of our branches, and we have subsidiary which is UBI Securities Limited. So that is actually also helping us in building the retail portfolio. They are our the marketing arm for the bank.
Sure.
So I think the retail and MSME, we are going with a cluster approach on various specific areas which are very good, and there is hardly the NPS in those regions, and we are going competitively, which is in the market scenario.
Sure.
So I think that is on agriculture. You must be seeing around 108 crore profit we have booked in SBLC, which shows on the small and marginal farmers and others, we have grown better in this last quarter.
Yes. Ashish ji, apart from that, what is the projected impact from the ECL norms, which is being implemented from April 1st on the ongoing credit cost, given the estimated transition impact would be roughly 4,200 crores?
Yeah, I think we have worked upon, and we do have a software in place, and we regular intervals we calculate and see our position, keeping in view the draft guidelines. So the overall, the requirement as well as the provisions which we have made across our loan book, the gap is hardly 4,300 to 4,500 crores range, and which is in much comfortable. This is actually I am talking about on the migration side. On the dynamic, regular basis, certainly the other part also you must be observing from our investor presentation that the SMA position above 5 crore is hardly 4,285. The slippages ratio has decreased, and also the credit cost. So I think that is not a much issue, and there is already a guideline for phasing it out for the 5 years. I believe that is sufficient, but the gap itself is not very high for us.
All right. And Ashish ji, what's the sustainability when it comes to the NIMs? Are you expecting the compression going ahead?
See, two scenarios I will say. The one is, the present scenario, because the economy is behaving very well, the GDP growth is coming very well, and there is a low inflation, so all conducive environment. So in case, there is a further rate cut, because our MCLR book is 48% and the repo and T-bill linked benchmark, it is around 52%. Now, there was a rate cut. If you take from December 24 onwards, after that, in the current financial year, there is a 1.25 basis point rate cut, which has already been transmitted to the customers. Now, even then, the December 24 NIM was 2.91, which is right now 2.76. So there is a reduction of hardly 15 basis point on that. Coming to quarter, we could improve by 9 basis point. I think this is a very good signal because of the various efficiency, measures taken by the senior management of the bank, and certainly drill down to our branches level. Now, going forward, as you asked, NIM on the both scenarios, I think we are confident to defend at least this, but have an aspiration to move it forward, because when we aspire for a better CASA going forward, and if you take roughly I am saying the 1,000 crore of CASA, it amounts to around 35 to 40 crore of a net profit. So I think all these scenarios, and the loan book, which is now increasing on the RAM side as well as on the corporate book, we are sure that defend. Yes, we are very sure of defending it, but then going forward, we will aspire to be better, improve upon that.
Thank you very much, Ashish ji, for giving your time and also giving the entire perspective for Union Bank, current and the future as well. Thank you very much for joining with NDTV Profit.
Thank you so much, Richard. Thank you.
Welcome to NDTV Profit's budget exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry, and to give us more perspective, we are joined by Shrey Mittal. He is the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It is contain maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory, we are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soya bean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना रेलेवेंट है और भारत का प्रोटीन क्या सोया है?
Yes, definitely. You can say it contains maximum number of protein. After the COVID, corona, we can say everyone conscious about their health conscious.
Right.
So basically, सब जनों को ये लगने लग गया कि हमको हमारी हेल्थ कॉन्शियस पे रहना है, हम कैसे अपनी डाइट को प्रोटीन को इंटेक फुल करें.
द सोया प्रोटीन, दिस द ओजी प्रोटीन्स, हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. तो राइट नाउ द जनरेशन, व्हाट डू दे नीड टू नो अबाउट the soya?
These are natural kind of protein. We can say protein powders भी आता है, न्यूट्रिशन पाउडर भी आता है, पर उसमें कहीं ना कहीं अडल्ट्रेशन रहता है, मिक्सिंग रहती है. ये जो है ये नेचुरल प्रोटीन अपन इसको बोल सकते हैं. ये डायरेक्ट फार्मर से आता है. मैं आपको लेके चलता हूँ अपने नेक्स्ट पार्ट में जहाँ अपना रॉ मटेरियल इंटेक हो रहा है हमारा.
एंड Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
This is a raw material of soybean. तो उसी का ये हस्क है. जब हम रॉ मटेरियल वहाँ देखेंगे, वहाँ से हम ओपन करते हैं, तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं, उसको हम यहाँ पर स्टोर करते हैं. तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्परेरी स्टोर करके हम रखते हैं इसको यहाँ पर.
All right. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there has been a lot of support coming in the agriculture space. तो आपको क्या चेंजेस देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश के सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट है ही सही, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं. आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री की सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं.
We saw the two processes there. What is this process?
दिस इज वी कैन से सोया रिफाइन, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन जो कि हम देखते हैं मध्य प्रदेश, राजस्थान सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है, यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है.
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
ओके, सो बेसिकली ये ऐसा है कि यूएस गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल्क केक है वो इंडिया में इंपोर्ट हो. बस वो अपना हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है, वो होता है नॉन जीएमओ. उनका आता है जीएमओ. नॉन जीएमओ इज नॉन जेनेटिकल मॉडिफिकेशन, उनका केमिकल मॉडिफाइड रहता है. अगर वो इंडिया में आता तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी. प्लस जो हमारे लोकल प्लेयर्स है उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा. रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये लगता है. तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको.
एंड श्रेय, बट द वेरी इंपॉर्टेंट थिंग इज योर बजट एक्सपेक्टेशंस. बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज ए इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए. हमारा आज भी एक्सपोर्ट जो है बहुत कम है एज़ कम्पेयर टू यूएस, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनके प्राइस कॉम्पीट नहीं कर पाते. डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू यूएस, ब्राज़ील, अर्जेंटीना.
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें या वर्ल्ड वाइड देखें तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज़ हो रही है डे बाय डे. तो उसके लिए एक सोर्स हमारे पास ये सोयाबीन ही है, जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है. तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे. प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है. इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखते हैं.
Thank you very much, Ray, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I'm spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards.
You can get everything at the click of a button. But the moment you want someone to help you clean your home or wash your dishes, it seems like the most unimaginable task.
The idea of trying to organize help through an app, why and where has that idea come from?
I personally grappled with it to the point where I literally had to call my mom. And as a matter of fact, she flew down from Calcutta. And
to help you find someone to clean your house.
Yes.
Everyone goes and speaks to the watchman. You know that, right?
Yes. I didn't know that channel existed.
You worked with Zepto.
Yeah.
And ending up your career with Zepto as chief of staff. You didn't do it for long.
I did it for 9 months. See, the company matured too fast. I think eventually the organization found a lot of structure and better people to do it, in fact.
Are we ensuring that the lives of those who are doing these jobs are also truly becoming better and are not exploitative?
Discounts that we introduce are actually funded by us and nothing that the expert has to bear the brunt of. So a lot of people think that the 10-minute value proposition is great for consumers, but it kind of puts pressure on the expert side. It's actually untrue. It's also great for the expert who just spent 5 minutes to reach you, which means they can actually do more jobs within their data period.
Thank you so much for joining in.
Thank you so much, Tamanna, for having me.
I believe you are the youngest company to have been featured on this show in the year or that we've been doing it.
Clearly, we're doing some things right.
Yeah. So I think the reason we're talking to you in what is possibly your infancy, as far as the life cycle of a company is concerned, is because of the pace and speed at which you have also grown and the space you're in.
Yeah.
And not that you're the only one, but the idea of trying to organize help, domestic help at home, these services through an app. Why and where has that idea come from?
So I think, obviously I've been doing a bunch of jobs before this, right? And the one problem I always grappled with as a bachelor living in Bangalore or in Bombay was that you can get everything at the click of a button. So you can get your food delivered, you can get groceries delivered, you could get a cab in a couple of minutes. But the moment you want someone to help you clean your home or wash your dishes, it seems like the most unimaginable task. And I personally grappled with it to the point where I literally had to call my mom and say that, look, I don't know how to get it done. I have tried everything digitally available because that's the fundamental and default way of doing things today. But that doesn't seem to work in this category. And as a matter of fact, she came down. She flew down from Calcutta and
To help you find someone to
Yeah.
clean your house.
yes.
Everyone goes and speaks to the watchman. You know
Yes,
that, right?
yes. So I think I was just like, I didn't know that channel existed.
Wow.
That you can for everything else you try to download an app, but for this you still need to go and talk to your watchman.
Hmm.
But
There are still some things that happen IRL.
exactly why Snabbit is around now. So yeah, I think that whole experience left a very deep mark on me. So despite a lot of attempts that had been made previously to kind of regulate and organize this category, we took a very fresh approach, came up with this hyper-local on-demand concept after a bunch of trial and error, and finally that's what you see as Snabbit today.
Okay, we'll go into those trial and errors first, but let's rewind a little and start at the beginning. Early life, education, and then the first job.
Yeah, so I think I was born and brought up in Calcutta, and I lived there right up until my graduation. So was always a studious kid, deeply involved in extracurriculars. But I think somewhere along the way, lost my path and got really too relaxed about life. I think it was a great learning. It was a great experience to just like look at every other part of life and then get thrown into the part where you need to really build yourself up now. So that's how I found myself in IMT Ghaziabad, where I did my MBA. Right after
They didn't tell you how to find help and speak to the watchman? during this
Definitely not.
MBA?
That's not part of the MBA curriculum. Hopefully someday Snabbit will be a case study, but not as of now. So spent a couple of years over there, and then finally got posted in Bangalore at an investment bank, doing a back office job, which didn't excite me as much, and that drew me to the world of startups thereafter.
Yeah, and then you worked with Zepto,
Yeah,
and ending up your career with Zepto as chief of staff.
yeah.
What does a chief of staff do?
The chief of staff basically does anything and everything in the company. So I think an organization defines what a chief of staff does. So it's not true for any two organizations. It's not the same. But I think at least at my time at Zepto, I had two key charters. Number one was solving problems, and trust me, there were a bunch of them in the early days because the company was growing really fast. So whether it was about going into a dark store and solving for inventory issues, whether it was about looking at a particular city that might have not been doing it very, very well, those problems which were deeply operational and also gave me a very on-ground understanding of how hyper-local businesses are run and built. I think that was a fundamental part of what I did. And the second thing was just helping in raising capital, working very closely with the founders, and actually withering one of the toughest macro environments of the funding winter in a category that for long remained misunderstood. And I think coming out of it as a unicorn, I think those two things were charters that I predominantly helped with.
Yeah, so sounds like a position that's very, very crucial, important. You didn't do it for long, though.
Yeah, I think I did it for 9 months.
That's a blink in a career.
Yeah, I think, see, the company matured too fast and it grew very fast as well. So I think for a lot of things that I was initially doing, I think eventually the organization found a lot of structure and better people to do it, in fact. And as a restless person who wanted to do more, I just decided to start up.
But it gave you a great grounding on how
100%.
to, because you shadow the lead, right?
Yes.
In that sense, and it taught you how to build up a company. Would you have a chief of staff? Do you have a chief of staff?
Yes, I do. He's joined in very recently, but I do.
Yeah, so at least 9-10 months you have with him. No.
Until he starts his own company, which is great. But
No. On a lighter note, the reason I'm asking about it is because I think it's interesting that you've sort of had your first experience working in consumer internet in a company that delivers groceries in a very short time.
Yeah.
And then to some extent, you apply this to delivering services. But what gets tricky when it comes to services, and that to one which is not clearly defined, is then it's about people. And everyone's different.
Yeah, I think, see, the only constant actually, the fact is that 90% of it is different because you're traditionally dealing with a very different cohort. You're not dealing with a male-heavy cohort, you're dealing with a female-heavy cohort. The way you look at the network design, the way you plan everything, those playbooks have to be built from scratch. I think the only thing that really actually extends itself to any quick business is the density and the network economics, because how dense our micro markets are, and how our neighborhoods are structured, those allow for such businesses to flourish. And I think that is the only part that I borrowed. And I think that was the innovation, that no one in services ever thought of being a truly hyperlocal model. But if you look at your traditional house help, if you look at your traditional cook, they're actually operating a hyperlocal model.
Yeah, they live there. That's why they can come every day.
They don't just live there. They actually work at the 4th floor, and then they probably work at the 6th floor after that. Then they go into the next building, and then they work in the 5th floor over there. So they're basically operating offline, but hyperlocally. And yet no formal service model was created, which was hyperlocal in nature.
What is the sort of training, or what is the attempt to make it more uniform so that you have a uniform service?
So let me give you an instance, right? So for example, we stay at hotels very often, and for prolonged stays, we get housekeeping done every day. You will mostly see a different person turn up every morning and to clean your room. Yet we don't seem to have a problem. And the fact is that they have been trained in the same way to do the same thing, right? So for as long as you're able to create a training curriculum which can condense all those learnings in a shorter format, which we've done for a span of 3 days, and you're able to solve for intent of the expert. So the entire training module that we have at Snabbit is geared towards solving for intent of the expert, because we know that the skill level of the service that we provide is not very high. But if you have the right intent, there are actually very few ways of cleaning the house, which is why only 3% of our jobs are rated 1 on 5. And more than 90% of our jobs are rated 4 and 5. And we're talking about thousands of orders being delivered daily.
What is the average daily order volume?
Right now, it's 20,000 jobs.
20,000 jobs a day already, huh?
Yes.
And how long has the company been in existence?
Roughly around 7 quarters.
Wow. What is the scale of growth that you're seeing? I'm just trying to understand what is the appetite for this, because we are such a diverse and vast country, right? For a section of people watching this program, they must be thinking it's a no-brainer. Of course, I'd love this.
Yes.
For a section watching it, they would say, this makes no sense. You have a relationship with the person who comes and works in your house every day.
Yes. So I think, so there are 2 ways of looking at it, and I think it can draw parallels from any other consumer internet business. So there is a default and a primary way of using a platform, and then there is a backup way of using a platform. To think of it in the quick commerce context, a lot of people use quick commerce for their entire basket of monthly groceries.
Yeah.
A lot of them use it for top up, right? We have a bunch of young consumers who think that they want the flexibility of being able to call for a house help at the frequency and time that they need. Now, getting someone to come and clean your home is as simple as getting a cab, something that, I initially kept thinking about, right? But then you always also have those families that rely heavily on their house helps and
Yeah, like I said, it's a relationship in a lot of cases. So, okay, the sampling that I have done and people I have spoken to, and I think you're right. For those emergency days,
yes,
I think you would be seeing a lot of people coming, and you advertise that way also, that if your regular help has suddenly not turned up, you don't have to fret, and you can just have someone come in. Then there are questions. How do I trust? Because this is also a relationship of trust. You're letting someone into your house.
Yeah. So I think Snabbit is a very interesting and a very important use case whenever that relationship breaks, and it breaks at least 4 or 5 times a month when your house help just doesn't turn up, right? And for very fair reasons, something we don't empathize with fully, but I think having built Snabbit, I now understand why these
people have other things to do. I know, and this is a segment of society which does not get the fair treatment it deserves.
Yes, I think when you're the secondary breadwinner of a family, you have to deal with everything else that happens at home. And we're primarily dealing with a lot of secondary breadwinners. So I think when Snabbit steps in, the onus is on us to make sure that the trust is at the same level at which it exists for your traditional house help. So for example, we go through a very rigorous process of background checks and vetting. It's not just about ensuring that your Aadhaar card is legitimate. It's also about getting a very thorough background verification done. Your court and criminal records are checked. And we actually have physical training centers where these experts spend roughly around 25 hours across 3 days, and then eventually get certified to go out and service customers and few of them don't make it. So I think the process that we've built on the supply chain side to ensure that it's not a low touch point model. We engage with these experts deeply.
Now let me come to, I think, the hot potato topic right now, which is that these are essentially gig workers. They would come under the overall overarching theme of or category of gig workers. And the question right now, which has become a national debate really, is in all of these models, which make the lives of people like us easier, get someone at a touch of a button, I'm sitting in my house, I don't have to stress. Are we ensuring that the lives of those who are doing these jobs are also truly becoming better and are not exploitative?
Yeah.
How aware and how big a part of your model is this to make sure that they're being paid well? Because some of the rates initially that you see are very, very low. It's as low as I think $100, $150 an hour. That truly, on the face of it, seems exploitative.
Whenever you're introducing a new category to the consumer, you want to, and typically this is how all consumer
this is
internet.
acquisition cost.
This is an acquisition
You're heavily
cost.
subsidizing what
Yes.
people pay.
So we're basically saying that we want to make the first offering to a consumer so sweet from a pricing perspective that you get introduced to the concept. And once you understand and you take a feel of how disruptive it truly can be, you end up paying the full price. And that's how the pricing model is. So any discounts that we introduce are actually funded by us. And those are not intended to be perpetual in nature, but they're only short term because this category is being built from zero.
So how much cash are you burning right now?
Not much. I think it's becoming better. But I think we definitely burn a lot more when a consumer is purchasing the first 3 orders with us. But I think that burn significantly reduces.
Is there a metric you can share of what the customer acquisition cost is right now?
See, roughly our customer acquisition cost is around 500 to 600 rupees. And we're confident that if given the fact that we have best in class consumer retention and an average customer transacts with us 3 to 3.5 times a month, we're able to get a payback for that initial acquisition cost within 9 to 10 months, something that we're working very aggressively towards bringing down. So I think it's just I would say an incentive for consumers to get introduced to the category and nothing that the expert has to bear the brunt of. Talking about the expert, right? Think about this model. The way it works is that and this is one of the hardest pivots we did. The biggest pivot we made was from subscription to an on-demand service. The moment you're paying for 1 day of service, the propensity for the customer to pay or the elasticity of price significantly reduces. So people are relatively price inelastic when they're solving for an urgent ad hoc use case, which allows us to command almost 100% premium.
How much does an average help or expert who works with your company earn in a month?
An average expert who works with us 8 hours a day and 25 days a month, because we're very flexible with leaves, typically earns north of 20,000 rupees.
And you're saying that this is much more than they would otherwise earn.
Yes.
And how many jobs would
And they're not working for 8 hours. So
how many jobs would they do typically in a day?
They would typically be working for 5 hours.
5 hours a day.
So they're working for 5 hours and they're making somewhere around 23 to 24,000 rupees.
Okay. Do you think that this is a sustainable model? And the reason I ask this, that when we have seen the journey of a lot of businesses fueled by gig work, whether it's cab hailing, whether it's delivery, whether it's quick commerce, whatever it is, it starts off as a great proposition for those you bring in because you have to pull in supply and demand, right? Over time, that starts changing. At least that's what the trend has been so far. How will you ensure that doesn't happen while you still turn a profit?
So we have to, it's a very good question, right? And I think businesses like ours, consumer internet businesses like ours, are either perceived to be burning a lot of money or they're perceived to be like, making some kind of exploitative change on the expert side. But I think the fundamental balancing factor over here is the system efficiency, which for us is measured in terms of utilization. So the way I look at and the way I would like for this category to be understood is that you have 8 hours of work that the expert is willing to do. Now, what part of it you're able to utilize is up to us. which means that at what frequency within that day can we actually provide jobs to that expert? Because what the expert is ultimately optimizing for is the take-home salary. And she is actually available to work for 3, 4, 5, 6 hours within that 8-hour period. Now, because we need to guarantee a certain amount of take-home salary for that expert, even if I'm not able to provide them for the 4 or 5 hours of work, and even if it's 2 hours, I still need to provide that.
Okay, so now let me understand this. You have a minimum guarantee of payments for someone doesn't get a single call?
Yes, we do.
Okay.
So the way it works is that as your system becomes more efficient, as your network becomes denser, you are able to provide more jobs to the expert. As your networks become denser, the experts spend less time traveling. So a lot of people think that the 10-minute value proposition is great for consumers, but it kind of puts pressure on the expert side. It's actually untrue. It's quite the opposite. Imagine someone traveling 5 minutes to deliver a 60-minute service. They're actually spending 15% of unmonetized time to earn for 100%. Imagine the same expert traveling 30 minutes and reaching you in 30 minutes to deliver a 60-minute service. Now they're spending 50% of the time as unmonetized, right? So actually reaching you in 5 minutes is not just great for you as a customer, it's also great for the expert who just spent 5 minutes to reach you, which means they can actually do more jobs within that 8-hour period.
What is the cap on the number of jobs per day?
It does not depend on, because a job could be a 4-hour job, it could be a 2-hour job. So the cap is not on the number of jobs.
The number of hours at one go, or it's 8 hours they need to be available?
They need to be available in 8 hours. It's like a shift that they're working in, very much like any other shift works. And how efficiently we're able to utilize their time, yet make sure that the conditions are very, very favorable, that's on us.
What perhaps is going to be a challenge is to continue to make sure you're also preserving the dignity of those who are working and how much they're making going forward as the volume grows.
So I think we're very clear on our fundamental principles that this model will become profitable, not because we will pay our experts less, but because we will be more efficient as a network. And that's a fundamental belief that we have, and that's how marketplaces are built. And as far as dignity is concerned, so see, the smallest changes drive the most meaningful outcomes. We don't call them maids. We don't call them house helps. We call them experts because we genuinely believe that the work that they do is extremely critical.
Do you think they care? Wouldn't it be more important if they're actually making proper money?
You will be surprised, but it's not. When they wear that uniform, when they accept a job and when they enter that OTP, and when someone calls them madam, they feel really happy. And I think that feeling, I don't think there's an amount of money that can solve for it.
Why the name Snabbit?
Snabbit actually means quickly in Swedish.
So you took a Swedish name of all things.
But it rhymes with a lot of English words which also talk about speed.
Rabbit.
Snap it.
Snap it. Okay.
So we were very clear that, there are two vectors that, you can build a consumer internet company on. One of them is quality and the other one is speed. So we wanted to occupy that mind space and say that we're not just great because we know you already think of us or we will just be out of business, but we also want you to know that we're very quick. So I traded through a few names before finally arriving at Snabbit.
Let's talk about the elephant in the room. You have a rival, which is loaded up right now after raising money from the capital markets, established since a longer time, knows how to work in the delivering service on a consumer internet technology platform. How are you going to deal with that?
Let's say we're already dealing with them. But look, I think firstly, I have massive respect for what urban companies built. I think they've built a phenomenal business and I'm in a very complex category, right? And I think they've kind of been the only organized player that has really scaled and now it's listed. So I think the way I look at it is that having competition that has executed really well historically only pushes us. I don't think we would have been doing 20,000 orders a day if we didn't have competition. So in a lot of ways, I think competition has allowed this category to be built faster. And the very, very healthy rivalry or competition that we have with the urban company in this particular category has landed them a category which is very high on frequency. And like as we can see, they're investing heavily in InstaHelp. As for us, we think this is a very, very different category. For example, it's a hyper-local, nano-market driven, non-inventory based, high-frequency category, which is charged by the hour. None of those things are true for any other category that UC has, right? So I think while it's in the service domain, there's a very distinct difference between.
No, but InstaHelp and Snabbit have the same service.
They have the same service, right?
Yeah.
But all I'm saying is that InstaHelp actually came into being a year later. So we started in 2024. InstaHelp started in 2025.
Are you saying the idea came from you?
Yeah. That's that's not conjecture. So I think back in 2024, when we delivered our first order, there was nothing like this that was operational. And it's only after we raised Series A and I think we started getting meaningful traction. I think that's when people took notice about this category, which I think was validation for us. So we never saw it in negative light, and we don't see it in negative light today as well. So I think consumer internet categories, largely successful ones, have not been monopolies. They have been duopolies, right? So I think the fact that we're at a very early stage competing with a publicly listed player that has so many years of experience behind it actually makes us compete really hard, execute really well, and eventually get to a better outcome.
What would you say would be your goal for your company, for yourself 12 months from now?
Yeah, so I think this is a very deep category and a very large one. An average household, just to give you some numbers, spends roughly 50,000 rupees a year on services. And 98% of those spends are today offline. So this is typically, if you look at the top 50 million households, this is a $40 billion annual spend category that is growing at double-digit CAGR, expected to be roughly around $100 billion in 5 years. And 98.5% of that is still offline. So the scope to disrupt, not just in one category, but in multiple categories, is really large. I call it India's last major offline habit, right? Because everything else we're used to doing online now. And I think we're just getting started. So we're doing 20,000 orders. Just to give you some numbers, 40 pin codes only drive 80% of the orders we're doing, because the rest of the micro markets that we've launched are fairly young. It's just been launched 3 months back. So I think there's a lot of depth in this category. And we genuinely feel that there is going to be a point in time, I don't know exactly when, maybe like a couple of years out, maybe more, but 1 million jobs a day is actually going to be a reality for this category.
Wow. So a lot to unpack. Ayush, this sounds like an exciting journey. We wish you the best of luck.
Thank you so much.
And thank you so much for coming in today and taking our questions.
It's been my pleasure. Thank you.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance, where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
New year. New power panel. India
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets are fared today. So benchmarks have erased the Friday morning cheer in a late pullback with Nifty ending below 25,700 levels. Nifty has ended largely flat for the week while Sensex also managed minor gains for the week. And sectorally, if we talk about, so IT stocks have seen some strong buying there in trade today as the sentiment improved on the strong Infosys outlook, and on the losing side, pharma was the top sectoral drag today, followed by energy and metals. In fact, Infosys has raised its full-year revenue guidance to 3 to 3.5%, which is up from the earlier 2 to 3%. Now, after delivering a largely in-line Q3 performance, but profits are, taking a hit, down nearly 10% sequentially as the company absorbed a one-time 1,289 crore impact from the new labor codes, dragging the bottom line. Despite the profit miss here, Infosys has reported strong deal momentum with large deal TCV jumping 56% quarter on quarter to $4.8 billion, which is one of its strongest quarters on this front. And Cipla has been hit by two major disruptions. First, that its subsidiary has paused production of lanreotide, which is a key peptide drug, and with manufacturing halted, the resupply is now pushed out to the first half of FY27, and this is creating a long supply gap. Second is Pharmatin's facility in Greece, which is a partner in Cipla's supply chain, has received an FDA form of 483. So inspectors have flagged data integrity issues, and this is raising the compliance concerns.
So together, these manufacturing and regulatory challenges pose near-term supply pressures and also a potential risk impact for Cipla. And viewers, AMC stocks are seeing some sort of strong traction today. This is boosted by robust Q3 numbers from both the HDFC AMC and ICICI Prudential AMC. So the stronger than expected earnings have triggered broad-based basket buying across the asset management space. Now, at the same time, domestic institutional investors are steadily increasing their positioning, and this is also signaling rising confidence in the sector stability and also the earnings visibility. Brokerages too, in fact, are turning firmly bullish, saying that the worst of the margin pressure is behind the industry, and importantly, the market believes that the impact of lower, tier norms is largely factored in. I beg your pardon. Viewers, Nalanda Capital has made a notable move in IndiaMart Intermesh. This is scooping up a 1.86% stake for 236 crores, and this is signaling renewed institutional confidence in the B2B marketplace. So the stock's valuations have sharply cooled, now at a P ratio of 22.5 times, which is compared with the peak of 90 times in 2021, making it far more reasonable for long-term investors. And IndiaMart continues to deliver strong return ratios with ROCE at 34% and also ROE at 29%. And this is backed by a solid 29% PAT CAGR over the last 5 years. And as the largest online B2B marketplace in India, the company remains well positioned. Let's look at some brokerage notes now. Morgan Stanley has maintained its equal weight stance on L&T Technology Services while cutting the target price to 4,420 rupees. The brokerage has said that the company's recent strategic portfolio running is likely to moderate growth across FY26 and FY27 as the LTTs, recalibrate its mix of offerings. So, however, Morgan Stanley expects the pace of, margin improvement to pick up, and this is supported by operational discipline and also sharper execution. They have also highlighted that the company's medium-term margin aspirations remain intact despite the near-term growth headwinds. Next up, we have Federal Bank that has delivered a strong Q3 performance with robust NII driving a clear, earnings beat and also overall growth coming in better than expectations. Profitability, if we look at, remain healthy, and this was supported by strong, NIMs and also a solid uptick in the other income segment. And the net interest margins have improved, 12 basis points sequentially to 3.18%, while the other income has jumped 20% year on year, and this is giving meaningful push to the bottom line. So cost discipline has also showed through, with the cost to income ratio easing 12 basis points to 53.9%. And on the asset quality front, if we look at, provisions have declined 8% quarter on quarter to 330 crore rupees, and also slippages have been moderated. In fact, brokerages are turning increasingly upbeat on growth outlook, with both Citi and Jefferies maintaining their bullish stance. Now, Citi has a buy rating with a 195 rupees of target, and this is highlighting strong, traction in the MTF momentum, also improving the client activity and also steady progress in wealth and product scale up, while also retaining a clearly, constructive view on the platform. Jefferies is equally positive, and they've also, assigning a 195 target, and also pointing out that new ventures are ramping up faster than expected. They also believe that new businesses will be a major future growth drivers, and also they've noted that gross product velocity model mirrors Robinhood's approach. So Jefferies is also factoring in better operating leverage and raises FY26-28 EPS estimates as well. Viewers, Investec is staying firmly bullish on Angel One, maintaining its buy rating with a target price of 2,850 rupees. Now, the brokerage says that a strong quarterly performance should trigger earnings upgrades with better broking, realizations, driving a clear PAT beat here. Now, Angel One has also maintained its market share in the broking business, and they are underscoring the strength of its competitive positioning. Now, Investec is highlighting that the company's digital-first operating model is now delivering meaningful operating leverage, while new initiatives are also showing strongly early traction. Next up, we have Kernex Microsystems that has scored a big order win, bagging a contract worth 2,465 crores. And the order is for the supply and installation of 3,024 sets of onboard Kavach equipment, also strengthening the company's presence in railway safety space. So the project will be executed within 12 months, and this is marking one of Kernex's, fastest rollouts for such large-scale deployments. And also, what makes this, even more significant is the company's scale. So Kernex market cap as of January 14 stands at 2,128 crores, meaning that the order size actually exceeds the company's valuation. And since we are talking about, the orders, let's also talk about a stock that was under pressure due to an order. Now, HPL Engineering has missed out in the latest round of locomotive Kavach tenders, losing the bid for 6,300 units. Now, the company was edged out to, due to the lower competitor pricing, which has tipped the balance in highly competitive round of evaluation. Now, following this outcome, HBL has now revised the total demand estimate for Kavach-equipped locomotive units to 12,129 units, and this is reflecting the scale of opportunity still ahead in the nationwide deployment pipeline. Viewers, next up we have SW Solar that is soaring, after posting a strong Q3 performance there. Revenue has jumped 13.9%, which is nearly 14% to 2,092 crores versus 1,837 crores. Even though EBITDA has slipped, 4.8% to 66.9 crores, and this is pulling the margins down to 3.2% from 3.8%. The bottom line, however, showed stress, and the company has reported a net loss of 2.8 crores compared with the 14.8 crores of profit last year. But sequentially, if we look at, the numbers show sharp improvement, and this is backed by record order inflows and also the highest ever order book. Next up, we have Patel Engineering that is in focus after ace investor Vijay Kedia picked up a 1.01% stake, and this is also signaling renewed interest in the company's growth trajectory. Now, operationally, if we look at the numbers for H1 of FY26 show a mixed but improving picture. Revenue is up 7.2%. This is reflecting steady project execution. However, EBITDA has dipped 2.1%, and this is also indicating some pressure on the operating margins front. Now, on the positive side, if we look at profitability has strengthened meaningfully, with net profit rising 20.1% in the first half of the year. Next up, we have KPI Green that has secured a major solar order. Gujarat, bagging contracts for 534 megawatt solar power project. Now, the mandate covers both supply of goods and also comprehensive on-site services, reinforcing the company's execution capabilities in the large-scale renewable project. Now, the order strengthens KPI Green's position in the rapidly expanding solar energy space and also adds meaningful visibility to its project pipeline. Now, since we are talking about green energy, let's put the spotlight on a renewable energy counter. Vari Renewable has delivered a strong Q3 driven firmly by robust execution, leading to its highest ever revenue. EBITDA and PAT, the company has maintained its EBITDA margin guidance at 18 to 19%, and this is supported by disciplined project delivery. The unexecuted order book stands at 2.92 GWP, giving strong visibility for future quarters, while the company has also expanded into BESS and data center solutions. Now, broadening its clean energy footprint. Financially, if we look at, revenue has surged 136% to 851 crores. EBITDA has jumped 121% to 159 crores, and net profit has risen 125% to 120 crores, even as margins have moderated slightly to 18.7% from 20%. Next up, we have ME Photovoltaic that has posted a strong Q3 performance with growth driven by its capacity expansion and also better utilization levels. Now, both of which have supported a sharp scale up in operations. The company is set to deliver 6.3 gigawatts over the next 12 to 18 months, giving strong visibility for future revenues. Financially, if we look at, it's been a standout quarter. Revenue is up 118% to 1,152 crores, while the EBITDA has risen 105% to 413 crores. Margins came in at 35.9% versus 38.2%, still very healthy despite a slight dip there. Now, Zydus Life Sciences has received a key approval from the US FDA for its Electrom Bopac tablets, now which is a drug used in the treatment of blood disorders, and the therapy works by stimulating the bone marrow cells, helping increase the platelet production in patients with low platelet counts. Now, the tablets will be manufactured at Zydus' facility in Ahmedabad, and this is strengthening the company's US portfolio. So the drug is a significant opportunity, and it also enjoys annual US sales of about $1.26 billion. And India and the European Union are edging closer to clinching a long-pending free trade agreement as top EU leaders are set to arrive in Delhi for Republic Day celebrations. The visit is not just symbolic, it's strategic. Negotiations on the India-EU trade deal have made significant progress, with 20 out of 24 chapters already closed. Officials are saying that only a few tough issues remain, and the final push could happen during the summit on January 27. Now, Commerce Minister Piyush Goyal's recent Brussels visit is also being seen as a decisive step. Now, if sealed, this could, reshape India's trade ties with its largest export destination. And with that, it's a wrap on this edition of Market Express, viewers. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
IHCL in focus. It's set to acquire a 51% stake in Bridge Hospitality, bringing the boutique luxury Bridge brand into its portfolio as it accelerates expansion in the experiential leisure segment. This deal follows IHCL's recent controlling stakes in Ank Hotels and Pride Hospitality, significantly strengthening its mid-scale and leisure segments. To understand more about it, I'm joined by Puneet Chhatwal, MD and CEO at IHCL. Thank you so much for this conversation with us. Let's start by understanding why Bridge Hotels, why this controlling stake, what's the strategy there?
Good morning. Thank you for having me. I think this is a natural consequence of the partnership that we had formed with Ank and Pride. And we had the Bridge portfolio already on our distribution platform. And given the way the mid-market is expected to grow in India because of the rising middle class as well as the disposable income connected to it, which we've all seen with the rise in domestic tourism, I think it helps us to take a leading position both on the mid-market segment in leisure, in business, as well as in upscale segment through the Bridge brand.
What is the kind of addition to the top line you're seeing, Mr. Chhatwal, as a result of this acquisition and the other two that you mentioned as well?
You see, at the moment, we have done the acquisition, which will be complemented with asset management efforts. So the bridge acquisition should give an addition next year itself of 100 crore on the top line. Currently, the portfolio performs at an EBITDA margin of around 38%. We expect that with the operational synergies to go up to 40%. And I think given our distribution network, given the synergies in similar markets that we have, we should be able to drive higher value both at a brand level as well as at a revenue level. I can give you an example. In a city of Banaras, where we have the Taj Nadesar Palace, we're doubling the Taj Ganges inventory, adding another 100 rooms, should come online by the next 10 days or 15 days. Now we have the Bridge Rama. A few days ago, we announced the opening of Avantika, also on the Ganges, also on the Ghats. Then we have the Tree of Life, and we have a Gateway and a Ginger under development. So how we go into the depth of each of the important top upcoming micro markets in India has been a part of our strategy, and covering and addressing all customers in all segments is playing out very well for us.
Puneet, Neeraj here, I just wonder if this will become the template wherein large behemoths like your group will get enough opportunities to acquire either vertical specific or region specific brands at a good IRR price for you to expand while incurring lower costs.
Absolutely right. I don't know how you got insight into it, but maybe because you've been following us closely, Neeraj. I think important for us was to get our strategy right, number one. Number two was the capital structure needed for it. Then eliminating debt, building a good cash position, and then as and when good opportunities come up for inorganic growth, to deploy that cash cleverly so that you are not actually diluting the current margins or the growth in the top line.
And would it be fair to assume, I mean, because these acquisitions, per se, when I look at the numbers relative to your size, are not very large. So is this a string of pearl strategy, and do you believe that there is more in the offing over the course of the next 12 months, 2026, for example?
Yes, for sure. I think it's a very interesting question. The one we did earlier with the Ank and Pride was to convert 90% of that portfolio, or 85 to 90, whatever the number would be at the end of this calendar year or the next financial year, to Ginger brand. That would have given, or that will give Ginger a scale of 200 plus operational hotel in a 250 hotels portfolio. So we took 20 years to maybe get to our first 50. And then within 1 year, we just scale up. So scaling up a brand in this kind of segment is fundamental to the long-term success of the brand. And some of that may not add so much to the top line or bottom line, and some will. Then you try to use asset management initiatives to reposition that product within the same market. Then add, our F&B offerings like Cumin. Take the F&B offerings that the partners have done, and then you synergize to get the brand on a very fast track growth, so that 250 plus then goes on to become 500 or 700 in the next 5 to 10 years.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
NDTV Golf Pro-Am, in partnership with PGTI, returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies. Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work.
NSE notifies it will remain open for a live trading session during Budget Day on the 1st of February, falling on a Sunday. Trading will be conducted as per standard market timings. BJP-led Mahayuti Alliance leads in 116 wards in the BMC. BJP has an edge in 88 seats, while Eknath Shinde's Shiv Sena is ahead in 28 wards, followed by Thackeray cousins with an edge in 82 wards, while Uddhav Thackeray's Shiv Sena is ahead in 74. Raj Thackeray's MNS is leading in 8 wards. Market ends the week in green with ONGC and Tech Mahindra as the top Nifty 50 gainers. PSU Bank emerges as the top sectoral gainer, followed by Metal Index gaining over 4.5% for the week. Wipro's Q3 numbers miss estimates and the margins drop by 140 basis points to 14.8%, but Tech Mahindra beats estimates in the third quarter despite the revenue decline. MEA spokesperson Randhir Jaiswal says India and European Union will meet for FTA negotiation on the 27th of January, a day after they attend the Republic Day celebrations. And as the world gears up for World Economic Forum's annual meet from the 19th to the 23rd of January, a special report on why it matters is coming up ahead on the show. Hello and welcome. A very good evening, viewers. This is Mallika Mishra on NDTV Profit, and you're watching Profit 360, a show that gets you deep insights into markets, national as well as international news. Let's start with an interesting story that's just come out. You might have to work on Sunday because in a rare move, India's stock exchanges, the BSE and NSE, will remain open for trading on Sunday, February 1st, 2026. Now, this is because Finance Minister Nirmala Sitharaman will present the Union Budget 2026 at 11 a.m. that day. Both exchanges have announced full regular trading sessions with standard timings. The pre-open session will run from 9 a.m. to 9:08 a.m. And normal trading in equity, derivatives and other segments will also take place from 9:15 a.m. to 3:30 p.m. So it's going to be business as usual. Now this allows investors to react immediately to the budget announcements. Note that some special sessions like T+0 settlement won't happen on that particular Sunday. But let's now take a look at how the markets closed for the week. Now, in fact, markets closed a volatile day of trade with the Nifty snapping its two-day losing streak today. The index, in fact, gave up most of its intraday gains to end just a point above 25,700. But zoom out and check the whole week. The Indian stock markets closed almost flat. The Nifty ended marginally higher, with ONGC and Tech Mahindra leading the gains. For the full week, ONGC and Tech Mahindra and Tata Steel each rose over 5%. The Nifty Mid-Cap 150 slipped slightly by 0.05%, with LTTS and Dixon Tech being the biggest losers, both down over 10%. The Nifty Small Cap 250 also closed flat, where Tejas Networks and Apar Industries fell over 9%, but IHCL and Angel One jumped more than 18% to top the list. Among sectors, Nifty PSU Bank and Nifty Metals were the strongest gainers, both gaining over about 4.5%, with PSU banks taking the top spot. Union Bank of India and Bank of India led the gains in the PSU Bank Index. But moving on, there is an important story as far as results are concerned, because Wipro's Q3 numbers found out and in fact emerged as a mixed bag. Net profit fell about 4.4% sequentially to 3,119 crore rupees, while EBIT declined over 5% and margins slipped to 14.8% from 16.2% in the previous quarter. Revenue, however, grew 3.8% to 23,556 crore rupees, and the company has announced an interim dividend as well. Clearly, growth is holding up, but profitability remains under pressure. Let's get in my colleague Jasmeet, who tracks the IT sector very closely, for a deeper dive into what these numbers really mean. Jasmeet, thanks so much for joining. Take us through the key metrics as far as Wipro is concerned.
Well, I'll quickly wrap up the entire Wipro earnings in top key 5 takeaways. If you look at the overall numbers, they have missed the estimates, and profit also is a downtake, while the margins are down about 140 basis points. In terms of the CC growth, we see a good growth coming in terms of the overall QOQ basis. It's up about 1.4% versus 0.3% in the previous quarter. If you look at the overall impact that is coming from the restructuring and labor costs, that's impacting the margins, and the bottom line is at about 565 odd crores. In terms of the overall guidance, we see a positive up move coming in here. Management guides for a better guidance in Q4 from negative 0.5 to 1.5. The management has raised the guidance for Q4 to 0.2%. In terms of the overall deal booking, they have come at 3.3 billion versus 4.6 billion in the previous quarter. We see a slight downtick in terms of deal booking coming for the particular quarter. If you look at the key numbers, the revenue is up by 3.78, showing a good momentum in terms of top line, but the EBIT, margins and net profits are down on the back of increased costs. While on the back of this missed estimates and mixed set of numbers, the Wipro's ADR in NYSE is down about 6 odd %, showing a negative sentiment in the market.
Right, Jasmeet, thanks so much for that. So a lot of it would be a mixed bag as far as Wipro is concerned, but let's listen to what the CFO Aparna Iyer had to say about the impact of new labor codes on the company's earnings.
First is an increase of 302 crores for gratuity expenses due to the implementation of the labor code. And second is regarding a restructuring exercise that was completed during the quarter, and the impact of this is about 263 crores. I would like to confirm that we've now completed the restructuring that we want to and do not anticipate any further charges.
Viewers, Tech Mahindra's Q3 numbers were also in focus as they reflect pressure on the bottom line as well. Net profit slipped over 6% sequentially to 1,122 crore rupees, largely on account of one-time impact from the new labor codes. Revenue, however, grew 2.8% to 14,393 crore rupees, pointing to steady demand conditions. I have my colleague Jasmeet back again. Jasmeet, take us through the key numbers on Tech Mahindra as well. And when we were talking before, you said this has done really well. What made you say that?
Well, in terms of the overall tech Mahindra numbers, the numbers are beat in what the CEO was expecting in terms of overall margin growth, top line growth, as well as in terms of the overall EBIT growth. If you look at the miss comes on the back of the profits. The profits are down by 6% whereas CEO was expecting a profit uptake of 15%. So we see a big miss coming on the back of the profits. If you look at the other details, this marks the 9th consecutive quarter of constant margin uptick by the management, where they stay in touch with their targeted goal of 15% by FY27. They stay on track. While in terms of the CC growth comes at 1.7%. It's slight uptake from 1.6 in the previous quarter. While this uptake comes on the back of a weaker quarter, that should be noted. Other deals, BFSI fell the most in this particular quarter, about 6.2%, but the communication, being the biggest segment for the company, has seen an uptake of 2.8%. If you look at the overall deal wins, if the deal wins shows a positive up move for the company, they are nearly up 34% on QOQ basis and crosses that 1 billion mark. If you look at the key financials, the revenue is about 2.8%, while the EBIT is up by 11.3%. The margin sees an expansion of 100 basis points and comes at 13.1%, on track to achieve the 15% goal. In terms of net profit, it's down about 6%, while this downtick comes on the back of that additional cost we see coming from the new labor code. That's something to watch out for. Well, further, the management also quoted that they see a broad-based growth going forward, and rest all the markets are doing well for the management.
Okay. So clearly, Tech Mahindra has shown some kind of sustainability on the margin front especially. But let's take a look at some other earnings as well. JSW Infrastructure has reported a steady set of Q3 numbers on a year-on-year basis. Consolidated revenue rose 14.2% to 1,350 crore rupees compared with 1,182 crore in the same quarter last year. EBITDA increased 9.8% to 644 crore rupees. All the margins softened to 47.7% from 49.6% earlier. Net profit grew 8.9% to 359 crore rupees versus 330 crore rupees from the period year ago. Now, overall top line and profit growth remain healthy even as margins saw a marginal contraction. But let's take a look at Tata Technologies that posted weak Q3 performance, weighed down by one-time cost. The company incurred an exceptional expense of 164 crore rupees during the quarter gone by. Revenue rose 3.2% sequentially to 1,366 crore rupees, but profitability took a sharp hit. EBIT declined by 11% to 157 crore rupees, while margins slipped to 11.5% from 13.4% in the previous quarter. Net profit dropped sharply to just 6.6 crore rupees compared with 166 crore rupees in Q2, largely due to the one-off impact. So quite a sequential downturn as far as the bottom line is concerned. But let's go across to a big exclusive story now. According to sources, the IT department has launched a major crackdown on food adulteration. Target are companies involved in milk, ghee and edible oil production. As a part of this investigation, 12 food and drug firms are under the scanner. We have also learned that such operations are underway across Delhi, Rajasthan and Uttar Pradesh. The action follows FDA sharing adulteration data with pharma and fertilizer units next in line. My colleague Shrimi Chaudhary joins us to tell us all the exclusive details on this story.
Absolutely, in a significant move, the Income Tax Department has launched enforcement action against companies allegedly involved in food and drug adulteration and widening the government's crackdown on unsafe food practices. In fact, sources told NDTV Profit that at least 12 companies dealing in products such as milk, ghee, vegetable oil and whey protein have come under the tax department scanner. In fact, search and survey operation already been initiated across Delhi, Rajasthan and UP and will soon reach to multiple cities. Now, what makes this action notable is the close coordination between the several departments, especially Food and Drug Administration, which recently shared intelligence data with the Income Tax Department after flagging adulteration in certain products. Now, this data sharing is said to have provided the initial trigger for the tax probe, but the Income Tax Department, of course, is going beyond the adulteration and looking into the financial trail behind it. Now, investigator began spotting patterns that did not add up in the company's book. And one of the major red flag being is the timing of the transaction. Several bills actually were adjusted near the end of the financial year, especially around January 31st, February 28th, and the March 31st of last year. That period is actually used to square off the accounts before the books are actually closed. Besides, the transaction exceeding 1 crore with a single party were allegedly completed in one or just two entries and often close to year end raised further red flag. Books also showing use of a lot of round figures, especially in the high value transaction. Now, the department is also examining the TDS payment pattern. In some cases, all TDS was paid in a single month, and that were long gaps between the payment. So clearly, it's a developing story as we get to know more as investigation widen. But what we've been given to understand that the probe will soon reach to some of the companies in the fertilizer as well as pharma sector. So we will be, keeping track of the story and will bring you more as we get more information on the development.
Let's now focus on the BJP-led Mahayuti alliance heading for a strong victory in Maharashtra's municipal elections, with trends showing a clear lead across key civic bodies. Voting was held yesterday and counting began at 10 a.m. today. The spotlight is firmly on the Brihan Mumbai Municipal Corporation, India's richest civic body. Of the 227 wards in the BMC, the Mahayuti alliance is currently leading in 116 seats, while the Shiv Sena UBT-led alliance is ahead in 85 wards. Maharashtra Chief Minister Devendra Fadnavis has congratulated State BJP Chief Ravindra Chavan on the alliance's performance. In a post on X, Fadnavis said the BJP has written history once again in the municipal elections. Counting is still underway and trends suggest a strong victory for BJP-led Mahayuti alliance. Let's go across to my colleague Saurabh Gupta, who joins us right from the ground. Saurabh, what's the mood like? Mahayuti seems to be leading.
Yes, leads coming in at the moment. A final result, though, will take time because obviously this is what it seems like a very slow counting process, and these are not final results. We've only had final results to about half the number of seats that are counted. So in that sense, yes, it's still a long way to go before the final results are in. But yes, the BJP seems to have made advances. It clearly seems to be in the numero uno position as far as the trends are concerned. And what has also happened is that while the Thakres have lost power, at least by what the trends are saying, Uddhav Thackeray has still held ground amongst the Marathi-speaking population, the Marathi vote, and has, in a sense, retained some clout and ground in the Mumbai Municipal Corporation polls. So, no writing off the Thackeray's yet. That's something that definitely these results don't indicate. But the BJP seems to be on the verge of making history. It seems to be in a position to install its own mayor, even if it means having the support of its allies, which includes the Shiv Sena led by Eknath Shinde. But at this point, this seems to be another victory. And across the state, if you see, the BJP has done well in places like Pimpri Chinchwad, etc. For the Congress, though, there is some consolation. While it has managed to win some seats in Mumbai as well, what has also happened is that it's pulled off something in Latur, where, of course, there was a very strong contest, and the legacy of the late Vilas Rao Deshmukh also, kind of delivering for the Congress party in Latur. But in Mumbai, the jury is still out. The BJP has a lead. The Shiv Sena UBT is still holding on to some of its ground, and the final results will take some time.
Right, Saurabh. Thanks so much for taking us through those key updates. As far as BMC elections are concerned, of course, as you said, that the results are not out yet, but BJP seems to be leading the race as of now. Let's now focus on another key development. The Ministry of External Affairs has confirmed that the next round of India-EU Free Trade Agreement discussions will take place on the 27th of this month, and said conversations are progressing steadily. The MEA also confirmed that the European Union leadership will be India's guest for Republic Day on January 26th, underlining the growing strategic and economic alignment between New Delhi and Brussels. Let's listen in to the remarks of the MEA spokesperson.
India-EU summit is to be held on 27th of January, and the leaders, the President of the EU Council and the President of EU Commission. They are visiting India. They are the chief guest for they'll be here on a state visit. They are a chief guest for Republic Day this time. On India-EU FTA, as I told you last time as well, that these negotiations are progressing.
As the world prepares for the annual meet of the World Economic Forum in Davos from January 19th to 23rd, we bring you a special explainer on why this global gathering matters. Why does the Swiss town become the epicenter of economic and policy conversations every year? Who are the power players attending? But before we go to that package, viewers, we have a breaking news coming in. We understand from sources in the CBDT that the tax department will revive assessment proceedings for Tiger Global post the Supreme Court verdict, and this will be done for assessment year 2019-2020. Let's go across to my colleague Shrimi Chaudhary joining us on the phone line. Shrimi, take us through this development that's come in. How exactly will this turn out?
Yeah, exactly. So responding a day after Supreme Court verdict, CBDT sources said that assessment proceeding in case of Tiger Global, which has been pending for long, especially for assessment year 1920, will now revive. What sources underline that the assessment proceeding against Tiger Global are going to be taken up by the tax department after clarity from the Supreme Court verdict, and they underline the fact that assessment had remained in abeyance due to the pendency of the matter before the Supreme Court, and with now Supreme Court settling the core issue, tax department is clear to move ahead with the final sort of calculation. Now, assessing officer will now complete the assessment strictly in line with the Supreme Court ruling. That's what the source is indicating. No final assessment could be framed earlier as the taxability of the transaction itself was under judicial scrutiny. So there were no kind of number they arrived at as far as, capital gains tax goes. A key issue which going to be under review as part of the assessment, since they are reviving now, will be the refund claim of around 1,000 odd crores, which was filed by the Tiger Global at that point of time. And now the amount had already been withheld under Section 241A in the Income Tax Act due to the ongoing proceedings. So sources indicating that the withheld sum, this 1,000 crores, is likely to be adjusted against the final tax demand subject to the outcome of the assessment. Now, this is very important and the key highlight of this Tiger Global case, because we've been wondering that what is the total quantum of the tax liability. So what tax department was saying, this 1,000 crore is going to be adjusted in the final tax demand. And of course, with Supreme Court decision, it's removing the legal uncertainty, as we've been reporting since yesterday that the case arising from the Tiger Global exit from Flipkart in 2018 as Walmart acquisition of controlling stake in the Flipkart. So, of course, this triggered the capital gains around 14,500 crore, and out of that 14,500 crore, the amount around 13,000 crore is received by the Tiger Global International 2 Mauritius-based entity, then 1259 crore by another entity, and 58 crore by the third entity. So total three entities actually received the total amount of 14,500 crore.
Right. Thank you so much, Shrimi, for explaining us that. Viewers, just reiterating again, we understand from our sources in the CBDT that the tax department will revive assessment proceedings for Tiger Global post the Supreme Court verdict, and this will be done for assessment year 2019 and 2020. But moving on, as I was saying earlier, viewers, as the world prepares for the annual meet of the World Economic Forum in Davos from January 19 to 23rd, we bring you a special explainer on why this global gathering actually matters. Why does the Swiss town become the epicenter of economic and policy conversations every year? And who are the power players attending? And what themes will dominate conversations in 2026? We break it down all for you, setting the stage for the world's most influential meeting. Take a look at this very special report.
This is Davos, a picturesque Swiss ski town. which for 1 week every January becomes the epicenter of global power and ideas. Nestled in the Swiss Alps, nearly 150 kilometers from capital Zurich, Davos is Europe's highest town, and every year since 1971 has played host to the World Economic Forum's annual meeting. But why Davos? Why a quiet ski town for such a crucial conversation? Precisely for its isolation and security. It's also the place that inspired German writer and Nobel laureate Thomas Mann's classic novel, The Magic Mountain, a novel about introspection and transformation in a secluded mountain setting, a fitting parallel to WEF's mission of rethinking the world's future. And what exactly happens at these annual meetings? Well, it brings together leaders from business, politics, academia, and civil society. So think presidents, prime ministers, Fortune 500 CEOs, Nobel laureates, thought leaders, journalists, and even cultural influencers, all converging in Davos. This year, the event is taking place from the 19th of January to the 23rd of January under the theme, A Spirit of Dialogue. Nearly 3,000 participants from close to 130 countries are expected, with US President Donald Trump among the headliners. And this is not just talk. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And the timing couldn't be more critical. Trade tensions continue. Markets are volatile. Wars continue to reshape alliances. Add to that the unpredictability of Trump's moves, and Davos becomes more than just a high-profile networking summit. It arrives at a critical inflection point for the world. As the world's most influential leaders gather in Davos, the stakes couldn't be higher. Because it isn't just about speeches and photo ops. It's where ideas collide, alliances form, and blueprints for the future take shape. And we will be on ground, bringing you insights from global investors, market veterans, and corporate titans. So keep tuning in to NDTV Profit as I decode the decisions that will echo far beyond these mountains.
And viewers, let's also take a look at the numbers, Q3 results of Reliance. Reliance just announced its Q3 results and it has come in below what was estimated. For example, its net profit has come in at 18,645 crore rupees, as you can see on your screen, versus the estimated figure of 19,271 crore rupees. Basically, the net profit, the bottom line of the company, has increased by 2.6% on a quarter-on-quarter basis. Revenue, the top line of the company, has again come in at 2.65 lakh crore rupees versus the estimated figure of 2.6 lakh crore rupees. So a tiny bit of a jump as far as the estimated figures are concerned, and revenue in terms of percentage has increased by 4% on a quarter-on-quarter basis. This is compared to 2.55 lakh crore rupees reported last quarter. My colleague Somit Sarkar is here to decode the numbers. Somit, could you take us to the segmental performance as well and through the key financial metrics on Reliance?
The weakest set of numbers that Reliance Industries has reported, the numbers are below but
there seems to be some audio issue. As we fix that, I'd like to take you through the key segmental numbers that have come in, and also keep an eye on the data that's reflecting on your screens at the moment. As far as segmental revenue is concerned, I'm currently having access to the main official sheet, and I can see that the O2C segment has increased by 1%. Oil and gas has taken a rather tough beating, that has decreased by 4% on a quarter-on-quarter basis. Retail has done extremely well. In fact, the best segmental performance reported from the retail segment with an 8% sequential growth. Digital has done moderately well at 2%. And others show a decrease of about 100. As far as EBITDA, I just read out the segmental performance in terms of revenue. As far as EBITDA is concerned, that reflects the operational performance. We have digital that has done about 2% higher, and O2C segment in terms of EBITDA has reported the strongest performance with a 10% uptick on a quarter-on-quarter basis. But that was it. We will, of course, decode this further. But thank you so much, ladies and gentlemen, for joining us on Profit 360. We'll continue bringing you a lot more news and updates. This is Mallika Mishra. Thanks so much for watching and keeping up the patience.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies. Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Now let's start the show, but before that we play a lot of guesswork with you to identify which company we are getting at KYC today. Also, let's give in the hints before you guess the company. It's a solar cell manufacturer. A lot of larger names have come up in the last 2 to 3 years. I'm just giving you one more hint on that, and it's one of them. The second one is they are beneficiary of China's cutting of the export incentives. Recently, there was a news flow also on this, and a lot of these power related companies were rallying on the trade. Also, the third hint would be that the earnings is coming on January 22nd. Now, just to put it in perspective, in our KYC show, because of the Sebi's non-disclosure rules, and it's a silent period, we will not be asking the management about the overall numbers, but we will ask something on the industry as well. But remember to track this stock. In some days, the earnings will also be coming in. Also, the company, let's make it the big reveal for the company, and that one is going to be especially the solar related company, and technical charts have also suggested that last 2 to 3 trading sessions, the deliveries have also going up. That means some value buying is happening. The company in focus is Premier Energies. That's what we are talking about, and we'll discuss more details about it. But let's just understand why we are actually getting this company in KYC. Of course, the numbers won't be discussed, but we'll discuss the industry dynamics. The first one is, what are the benefits coming in the China cutting in export rebates? Is the tide going to turn for the industry? That's one of the main questions to be asked. The second one, we are asking why Premier Energy is there in our show, is that the industry perspective would be there. Which side are the global solar prices going? Is it going up or is it going down? Is going to be a consolidation? A lot of questions are there, and a lot of viewers on KYC keep writing to me, and we will be getting these answers from the management. The second question is the raw material dependency on China. Will this come down, or will we still depend on China and our industry will suffer? That's a very big question to be asked. A lot of stakeholders ask us. That's what we'll be asking. Also, the fourth one, why we want to call Premier Energies, is what are the supply chain constraints? Have they improved, or is there still a problem or not? That's what we'll be asking. And also, the last one being is that the expansion plans. So there is a US market, there is a non-US market. Are the Indian solar companies looking at other places? Just because there's a lot of tariff issues which are coming with US market, clarity has not come in, just to put that in perspective. So the non-US markets, what would be the expansion plans? And on the show, we'll have Vinay Rustagi. He's the Chief Business Officer of Premier Energies, where he'll talk about the business growth opportunities which is there in the industry, as well as largely we can say for the company as a whole. But let's understand more about this company. And solar industries is a very technical aspect, it's having it. But let's just break it down what the company actually does. Company manufactures solar cells and solar modules as well. EPC and operation maintenance solutions, it's there. It's India's one of the first large players on this segment. There is the EPC segment and this operation and maintenance segment. And largely you will say that the company has made a first mover advantage when it comes to manufacturing these cells. Also going ahead, apart from this, is that the company is having a healthy domestic leg order book, and I'll give you the breakup also of what this entire domestic order book stands for. But going ahead, the total order book, look at that number, that's around 1,33,000 crore almost orders coming in the month of September. Of course, these numbers will be on the higher side when we get the December update coming in. So order book visibility is very strong. We can have a 5 to 7 year as per what the street analysts and industry experts told me. And the cell orders, they form roughly 59% of the order book value. So that is considerable. See, almost you can say 60% of that is coming in. So that's the order book visibility. But the module orders, that's roughly around 40% odd. And then of course the minor segments are also there which would be in focus. Remember, the company also has operations and maintenance in their business. Right now 100% domestic orders book exposure is there, but a lot of its peers already have business abroad as well, and that's why they are getting impacted more. And of course we will talk about that. That's especially Wari I'm talking about, and out here we talk about it, 99% of revenue just comes from domestic. So indirectly company is insulated as of now, and whatever global issues are happening from US markets, it seems like Premier Energies is insulated. So it's working in their favor. Call it luck or call it business placement, whatever it is. The Mission 2028, that's what the company is talking about. Just look at that. This is an important portion to look at. What's the future going ahead? And they are trying for an integrated clean tech platform. and we'll get into more details of this. This is a 10 gigawatt of integrated capacity coming across the value chain, and when I talk about it, it includes all the segments where the company is operating. Full backward integration from ingots to module, and whenever this backward integration happens of a solar company, you get your margins benefit also, and also economies of scale picks up. That means the industry has not peaked yet, and as and when the demand of solar panels increase in India, we might see these numbers going up and up. But yes, industry will definitely give cycles to it. It's the allied businesses, they are expected to contribute 25% of the revenue. And when I speak about the allied business, remember there is always an incremental margins chance in these businesses as well. This can also include your operation maintenance, asset management control services, etc. So this is a very important point. This is the Mission 2028, and of course, see, the result comes in higher margins and scale. So all of these features actually come in from Mission 2028. So we have, I think, 3 more years until the company comes with their numbers. But of course, during that time, we'll have a significant changes in the financials of the company. China recently cancelled the export VAT on the solar products, and this will be applicable on April 1st. To put in perspective, this benefits the company, and this export VAT rebate on the battery products would be cut to 6%. So there's an impact happening, and the Chinese exports, they are set to become more expensive. That means the pricing which was coming from China to India, it's not that attractive anymore. That means what happens is the domestic players, that's where they start gaining in, and the scope is much wider than the solar and the batteries. So you can imagine this is just not the company itself, but the entire ecosystem which is getting benefit, and 250 plus products are there across chemical, battery and electronics. Just to give that you perspective that this is just not there for solar industry but for other industries as well, especially the agrochemical segment. This includes the battery raw materials, industrial and the specialty chemical as well. So this is the important export VAT cut which is important, and China, remember, dominates this segment. So whenever we talk about the solar industry, China always comes up because of the cheaper products which are being imported in India, and now that pricing might benefit the Indian players. And remember, they supply most of the raw materials to the world. So the moment Indian solar players start reducing their dependence on that, it will start benefiting these companies. And remember, if these become less competitive, the domestic people start winning, and that is why I have focused my analysis on premier energies. Global prices, that's where they're expected to go up, and maybe it helps a lot for the Indian industry. And the 3 beneficiaries are there, and I'll be giving a detailed peer analysis also between them. There is Premier Energies, Vari Energies and Vikram Solar to focus on. But let's understand more apart from these beneficiaries, how we are going to give the ratings to the company, and let's just pull out how the ratings will be coming in. And remember, in KYC we have 8 rating schedules which come in. Of course, it includes income statement, balance sheet, cash flow, return ratio, but apart from that also you include other key ratings also. This includes your street holding and shareholding. But income statement, that's the first one I'd like to point out, and the company has done really well. Just let's look at the revenue, how it's going up. The top line has been significant. Last 3 years CAGR is 106%. That's a big amount. But even the EBITDA numbers, that's also been very strong. That's around 290% of the 3-year CAGR coming in. I was just looking at how the numbers are panning out. Numbers are also decent. It's turned profitable in the last 2 years. You see 289 crore, and then almost a 4 to 5x jump at 1240 crore rupees. Of course, we'll be checking the H1 numbers also. If you could just show the H1 numbers where the movement is there. Sequentially, there is a kind of a lumpiness, but year-on-year basis, look at this number. This has been really strong. 20%, 47% and 71% growth in the PAT numbers. Of course, concerns are there on the industry and the pricing front and the China impact, but net, the margin front is good. It's above the 31% mark. Can that sustain over the 30% mark? That's the question. But yes, Q3 numbers are coming in some days, so we'll understand how the entire thing plays out. But net, as of now, it's a very strong thumbs up when I talk about the income statement. Also, apart from the income statement, let's talk about how the balance sheet is panning out. That's the second parameter where we judge the company. Largely, the book values have gone up a bit, but the borrowing that has come down actually from 1900 odd crore rupees, it's down to 1500 crores. It's even Stevens if you compare the debt equity ratio. The cash balance is very strong, 1343 odd crore rupees. That means working capital, or if any expansion comes in this asset heavy business, then the balance sheet will be decent enough. But net, I will be giving this a neutral rating. So we have spoken about two rating parameters going ahead. The third one is the cash flow segment. How's the cash flows coming up? Remember, this is a high gestation business model, but the promoters, especially, we need to understand how much is the government and the private players payment schedule, and that is what determines the liquidity ratios also. Our net cash flow from operations and PAT has significantly gone up from FY23 to FY25, a very strong momentum, and cash flow to PAT conversion is also more than 100%. This is a very decent number coming in if you just compare that as a solar player. Net cash flows also have improved in FY25. It's around 546 odd crore rupees. That means the payment issues are definitely not there. The working capital ratio seems good. So for that cash flow segment, I have given a strong thumbs up. Apart from the cash flow segment, we'll talk about the return on ratios. Generally, you need around 15% to be happy as an investor. ROC, ROE numbers 15 to 20, इतना तो बनना चाहिए. इसमें देखो FY21 to FY23 it has been single digit as it was expanding, but now FY24 it has sustained that 25% mark, going past the 41% mark. Let's just show apart from the ROC, ROE numbers what it is, and largely the ROE numbers will also be mirroring these numbers. So the return ratios as of now is a very strong thumbs up when it comes to Premier Energies. Also from the return ratios, let's point out to other important ratios, and that one is of course the shareholding. Shareholding is very much important when you judge a company, especially to check the institutional holding of the company. So I've taken FIs and DIs. Have a look. March 2025 it was 3% and now it has been increased. It's just 4%. Remember, this is just a small data set because it was recently listed. If you're a long-term investor, you'll understand. DIs also, it's gone up from 9% to 13%. No stress, even if the retail portion has gone, the institutional ownership has gone up despite the stock taking some correction as well, and that's a very healthy sign going ahead. That means the institutions are betting on the stock to go up going ahead, and a lot of inflection points are there in this industry as well as the company, and that is why, although the shareholding pattern, I have given a strong thumbs up. Let's see what the street cred is. Street cred is nothing but the stock price movement which has happened, and let's look at it in the last 1 month. There is a significant correction coming in. Stock is down 20%, but let's see other momentums also, other times also. In the last 6 months, stock is down 30%. That's where the concern comes. If you have newly entered after the listing, it's year-to-date basis. That's just January month, 11% down. Also 36% down in the last 1 year. So of course concerns are definitely there, and because of that no major returns have come in. I have given this a strong thumbs down. But also apart from this, let's look at how the valuations against peers work, and there are 3 peers who would be in focus. Remember, most of the peers have seen a correction from their peak levels. Vari Energies, that's around 28 times the peak number was there, and now the 12-month forward P is at 17 times. Premier Energies, we talk about, it went up to 53 times, and see the significant correction coming in. So the valuations of these players, be it the industry or the company, have turned very attractive. And the technical charts, if you study them, you'll understand some bounce is definitely happening from the cuts which they had seen. So maybe for a short-term basis, as analysts talk to me, they say there is good chances for all 3 of them. But even if the valuations as a long-term investor, if you see, it is very attractive to its peak levels and also to its peers level. So it's a very strong thumbs up when it comes to the valuations. Apart from valuations, let's see the outlook, especially the 2028 vision outlook which was there. Now they have created an integrated clean tech platform. That's what they'll be focusing at. A 10 gigawatt integrated capacity would be there across the value chain. The third one is a full backward integration setup coming in, and when that comes in, margins and your scale, that also goes up. So that will be something to look at. The allied business, they are expected to contribute 25% of the revenue in the future. So these are the important missions, which the company is looking like. But let's just give you a total perspective about how things move for this outlook. Of course, I have given a neutral rating, but let's just revise all the ratings in our KYC show what we are actually giving the company. Income statement has been really strong. The 3-year CAGR numbers, the H1 numbers, and I'm thinking the Q3 numbers will also be bumper. That's what my analysis suggests. Balance sheet, it looks largely neutral. It's decent. Cash numbers are also there. Cash flows has been very good. The cash flow to conversion, that number, if you look at with the PAT, that has significantly improved. So I had given a strong thumbs up for it. Return ratios, they are going past the 35% mark, and that's very, very healthy. But can it sustain going ahead, or will there be industry lumpiness? That's what next 1 or 2 years will show you in the numbers. Shareholding very good because of institutionals adding up, be it FIs and DIs, both of them have been putting their stake up. That's more healthy rather than having more distribution in the retail segment. And that is where the smart money, the silent money starts coming in. Over the last 3-4 sessions, we are seeing that. Street cred, nothing there for the investors who have been holding it for the last 6 months, 1 year, 1 month. So big concern definitely is there. But because of these corrections, the valuations have become very attractive, be it the industry or be it the company's valuations from its peak valuations, it has been very good. Outlook, I would give neutral because this industry, the whole noise which was there about the solar growth and industry, it was very good 2 years ago. But now, of course, there's a lot of pushes and pulls in this industry. So just to be on the safe side, a cautiously optimistic approach, I would be giving the outlook a neutral listing. So the total KYC rating, despite having concerns, one of the highest I have given in our show because of the future and how much entry levels is attractive. I've given 6 out of 10 out of 8 in the KYC setup. So this is the entire setup where we will be focusing on and giving the views. But now the management is there, and we will be talking with the management. Mr. Rustagi would be there, and he's the PGDM from Ahmedabad and already been associated with the company, and also he has done an MBA from London Business School. So that's pretty interesting. And Vinay Rustagi will be joining in, but my colleague Varsha Channani actually caught up with him to understand this business of the China rebate, what's the benefit coming like, how the global price is looking, and of course industry specific questions. Do listen in.
So, I can't unfortunately comment too much in the respect of Premier Energies because we have our results due next week. And we are in a silent period, but I can comment on the general industry impact. Now, I think to understand the impact of phase out of export subsidies, we need to look at the larger picture here, which is that China has been trying to dominate the global manufacturing scene in solar, batteries, and some of the other products for more than a decade now. They have created a lot of overcapacity. And they have artificially basically kept prices low to make sure that manufacturing does not really take off in other countries. Now there's a huge financial cost to this because the government has been subsidizing the local manufacturers who are all basically making losses. And what has now happened is that the scale of the problem has become so big and the financial burden so unsustainable that the government is now trying to phase out these subsidies. And at the same time, the local manufacturers in China who have been making losses for the past few years are also now under pressure to increase prices. So the impact of this overall is going to be that the cost of products from China is going to go up, which means that there'll be more parity between prices at which Chinese products are available and the Indian products are available. So I think from a manufacturing point of view, it is a good news because we can now compete more evenly with China, both in the domestic market in India, as well as in other markets around the world.
Got that point. So basically the global, solar module prices may rise and the Indian manufacturers will actually benefit from this. Sir, can Indian cell and modules makers replace China at scale or there will be some supply constraints?
So I think the reality of the situation is that we are still dependent on China. Because a lot of the upstream material, whether it is polysilicon, ingots and wafers, and even some of the basic technology does come from China. So we are dependent on them for at least some more time. The good news is that the government in India has laid out a map for making the Indian solar sector self-sufficient. And as a result of that, companies like ourselves, we are investing very heavily in backward integration, and the intent is to reduce the Chinese dependence over a period of time.
Right. Also, sir, what is the opportunities for Premier Energies to aggressively expand into non-US markets?
So again, I will answer that from an industry point of view. So there are more and more countries around the world, not just India and US, which are basically saying that we need to reduce our reliance on China. We need to diversify our sourcing base. So there are more opportunities which are emerging in places like Europe, South Africa, Middle East, and even Latin America. So I think there are increasingly more opportunities which the industry is quite keenly observing and trying to examine.
Understood. Sir, so I would ask from an industry point of view in this way, so will the removal of these subsidies help Indian players win export orders, especially from US, Europe and Middle East?
So definitely, like I said, the impact of the subsidy removal is that the disadvantage that we used to have in India against Chinese exports has basically shrunk quite heavily. Now, there is still, I must admit that the Chinese cost of production is lower than India's cost of production. So they still have an advantage. But with measures like duties and a significant focus to shift their supply chain away from China, now we believe that we can compete in other countries alongside China.
Right. And so then what policy support, is still needed from government to fully capitalize on the China's export pullback?
So, like I said, the government in India has already laid out a map for making India self-sufficient in this space. What is the further policy support needed? I would say that we need to develop a domestic technology base. And there are some discussions going on with the government, between the government and the industry, to improve our R&D capability. Second is to develop India's machining and tooling capability, so that all the machines that we import from China right now for making ingots, wafers, cells and modules can be made in India to actually make India truly self-sufficient. And third, in the initial stages, while the scale is very, very small, I think some kind of incentive support is still required for the sector, because all these stages of production are extremely capital intensive. There is a concern in the investing community about the viability of these businesses. So I think any incentive support to fund a part of the capex for the upstream stages would also be extremely useful.
Right. And so there are concerns that, please correct me if I'm wrong, this announcement will have a negative impact on battery energy storage system segment. Just wanted to have your views on the same.
So again, I think the impact is going to be very similar to that in the solar space, in that the impact is positive for the local manufacturers. Even we are getting into battery manufacturing. And the result of these changes in China is that our products, made in India products, are getting more competitive. So on the manufacturers, it is going to be positive. On the consumers, which are basically ultimately using the batteries to store power, for them the cost will go up in the short run. But again, the beauty of the solar and the storage sector together is that prices already are at such low levels that even if the costs go up a little bit, solar plus storage and even wind, I would say, remains the most attractive source of power in comparison to whether it is thermal, hydro or nuclear. So even if costs go up a little bit, I don't believe the attractiveness of renewables will go away. Renewables will continue to be the cheapest and the most attractive source of power.
Right. And so, given that April 2026 is the deadline for the rebate withdrawal, do you plan, or for that matter, will the industry plan to front load imports of, critical Chinese raw materials to, lock in the lower cost?
See, I think, the timeline is very, very short. We only have, about 3 odd months. These are extremely expensive items. And usually, both the customers as well as the manufacturers like us, we try to import material only as and when needed, depending on project timelines. So it is not always possible to front load imports in anticipation of higher prices. So I think we may see a little bit of an impact, but I don't see any major move to import very significant volumes ahead of this deadline.
All right, thanks a lot, Varsha, for asking the queries to Vinay. And interestingly, the management is very bullish on the industry and new areas of business as well. Maybe some values are emerging for this counter. So that's all, folks, for KYC. Stay tuned to NDTV Profit.
First India News Channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
If you had to distill your vision and your outlook to running India's Reserve Bank?
These have been rather uncertain and challenging times, and we are very hopeful that going forward we'll keep the sector quite healthy and resilient.
Should Indians be worried about the rupee at 90?
We do not pursue or target any price level, any band. Our aim in the Reserve Bank of India is primarily to ensure that there is financial stability.
With inflation this low, is this really the best case scenario?
Inflation is at a level that we are comfortable with, because going forward, it's inching up. It's primarily because of supply side reasons, and it's because of base. A lot of it is because of base effect.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV
Hello and good evening. You're watching Market Express and I'm Himakshi Bhogna. Now let's get straight into the show. And now viewers are moving to the first top story that's coming in. In a move aimed at cutting the funding costs, Sebi has now proposed easing of cash settlement norm for FPIs. And I will be going to my colleague who will be joining us very shortly on the story. But I'll just take you through the key takeaways, on the latest development that has come in by the Sebi on FPIs. So this is basically to ease the cash settlement norms for the FPIs, and then the FPIs to net same day cash market obligations as well. And this move also aims to cut the funding costs for, the foreign portfolio investors, and is also netting allowed for buy and sell trades on the same day. The proposal is also expected to boost the operational efficiencies of the FPIs, and this would actually ease the liquidity strain during the high volume session. Sebi has also invited the public comments on the consultation paper by February 6th. And if we talk about the gross settlements, that has to continue for intraday same security trades, and the custodians are to manage the settlement risk under the proposed netting. And viewers, just an alert that this effort is seen as a part of Sebi's push to attract the global capital. So that's the update that's coming in by Sebi, and it's the market regulator's proposal on the FPIs. So they have proposed easing of the cash settlement norms for the FPIs, and this proposal may actually cut the funding cost for the FPIs. And now I'm being joined by my colleague Ridhima to tell us more on this latest development by the market regulator. Ridhima, over to you.
So market regulator Sebi has proposed easing cash settlement norms for foreign portfolio investors, or FPIs, in a move aimed at reducing funding costs and improving operational efficiencies. Under this, Sebi has said that FPIs currently have to settle every buy and sell trade on gross basis, even if both transactions happen on the same day. This often leads to higher short-term funding needs and liquidity pressure. Sebi is now proposing that FPIs be allowed to net their same-day cash market obligations. This means sale proceeds from the same day can be used to fund purchases, and only the net cash amount will be needed to be settled. The regulator says that this change will help cut funding costs for foreign investors and make trading smoother, especially during high-volume sessions such as index rebalancing, when large global funds frequently reshuffle their portfolios. However, Sebi has clarified that gross settlement will continue for intraday trades in the same security, and there will be no change in how shares are delivered or how taxes are paid. To manage any potential risk, custodians will be responsible for handling settlement obligations under the proposed netting framework. Sebi has invited public comments for this consultation paper till February 6th, after which a final decision will be taken. And this move is seen as a part of Sebi's broader effort to make the Indian markets more efficient and attractive to global capital.
Absolutely, Ridhima. Thank you so much for getting us those details on this crucial development that has come in by the market regulator. Thank you so much. And also, viewers, we understand from the sources in the CBDT that the tax department will revive the assessment proceedings for the Tiger Global Post SC verdict. Now, this will be done for assessment year 2019 to 2020. And I'm going across to my colleague Shrimi for more details on this development. Shrimi, over to you.
Yeah, so responding a day after the Supreme Court verdict, CBDT sources are saying that the assessment proceeding for assessment year 2019-20 will now revive, and assessment proceeding against Tiger Global for this assessment year will be taken up following the verdict. And since the assessment had been remained in abeyance due to the pendency of the matter from last several years, they are now settling the core issue and giving the tax department here move to go with the final number. Now, according to sources in CBDT, assessing officer will now complete the assessment strictly in line with Supreme Court ruling. No final assessment could be framed earlier since the transactions were not clear at that point of time due to judicial scrutiny. Now, key issue under review will be that 967 odd crore refund claim filed by Tiger Global at that point of time. That amount, however, being withheld under the Income Tax Act due to the ongoing proceeding. But this amount is important because now the CBD2 sources indicating that this withheld sum is likely to be adjusted against the final tax demand, the final tax liability, subject to the outcome of the assessment. Since the Supreme Court decision regarding the entire legal uncertainty, the process has now entered into the final number, the final determination of number stage, paving the way for the tax liability for Tiger Global. And as we've been reporting, the Tiger Global exit from Flipkart in 2018 as part of Walmart acquisition of controlling stake in Flipkart. That exit actually triggered the capital gains exceeding 14,500 odd crore, which became the base of the tax dispute. Out of that, Tiger Global, three Mauritius-based entities received 13,000 odd crores, then 1,200 odd crores, and 5,800 odd crores.
Absolutely, Shrimi. Just stay with us. I would just like you to, just consolidate it for our viewers and just, 5 key takeaways from this development that has come in and what's important to note here for our viewers.
Yeah, sure. So we've been reporting on Thursday, Supreme Court has, favored the Revenue Department on the long-drawn dispute in the Tiger Global case. The case arises from the Tiger Global exit from Flipkart in 2018 as part of the Walmart acquisition of controlling stake, and the total acquisition amount was around $16 billion. Out of that, the exit of Tiger Global, what Tiger Global actually received is around 14,500 crore out of total acquisition amount. Three entities were, received these 14,500 crore. That is 13,122 crore by Tiger Global International 2, 1,259 crore by Tiger Global International 3, and 58 crore by Tiger Global International 4. Now, Tax Department has consistently maintained that the structure amounted to impermissible tax avoidance, while Tiger Global actually had claim exemption under the India-Mauritius Tax Treaty. Now, the thing is that there was ruling by the High Court favoring this Tiger Global, claim on the treaty benefit in 2024, which was later challenged by the Revenue Department. And now, in the yesterday order, Supreme Court has clarified, and in fact, it sided the Revenue Department, saying that it shouldn't come under that treaty, and you are liable to cough up the taxes on the capital gains which is arising out of this acquisition. So here, the clarity is coming, which allow now the Revenue Department to calculate the final tax liability, and accordingly, Tiger Global is supposed to pay the taxes to Indian government.
Right. Thank you so much, Shrimi, for breaking down the story for our viewers so explicitly. Thank you so much for joining us on the Bulletin today. And viewers, let's move on and see how the markets have fared today. So markets have ended the week in green with ONGC and Tech Mahindra as the top Nifty gainers. If we talk about the PSU Bank, so that has emerged as the top sectoral gainer, followed by Metal Index gaining over 4.5% for the week. And moving on to a good news for the traders out there, NSE has notified that it will remain open on for a live trading session during budget day on the 1st of February falling on a Sunday. Now trading will be conducted as per standard market timings. Now on to the crucial Wipro Q3 earnings that has come out today. So it is a mixed bag. Net profit has fallen 4.4% sequentially to 3,119 crores, while the EBIT has also declined over 5% and margins have slipped to 14.8% from 16.2% in the previous quarter. Revenue, if we talk about, however, has grown 3.8% to 23,556 crores, and the company has announced an interim dividend as well. So clearly, growth is holding up, but profitability remains under pressure for Wipro. Next up, we have Tech Mahindra. So it has also reported its Q3 results, and they also reflect pressure on the bottom line. Net profit has slipped over 6% sequentially to 1,122 crores, and this is largely, on account of a one-time impact from the new labor codes. If we talk about revenue, So it has grown 2.8% to 14,393 crores, and this is pointing to steady demand conditions. So so that's about the Tech Mahindra numbers there. And moving on, AMC stocks are seeing some strong traction today, and this was boosted by the robust Q3 numbers from both HDFC AMC and ICICI Prudential AMC. So the stronger than expected earnings have triggered broad-based basket buying across the asset management space, and at the same time, domestic institutional investors are steadily increasing their positioning. And this is signaling rising confidence in the sector stability and also earnings visibility. Brokerages, in fact, are also turning firmly bullish, saying the worst of the margin pressure is behind the industry. And importantly here, market believes that the impact of the lower tier norms is largely factored in. Next up, we have Nalanda Capital. So that has also made a notable move in the India Mart Intermesh, scooping up a 1.8% stake for 236 crores. And this is also signaling renewed institutional confidence in the B2B marketplace. Now, the stock's valuations have sharply cooled, now at a PE of 22.5 times compared with the peak 90 times in 2021. And this is making it far more reasonable for long-term investors. So India Mart continues to deliver strong return ratios with ROCE at 34% and ROE at 29%. And this is backed by a solid 29% PAT CAGR over the last 5 years. And as the largest online B2B marketplace in India, the company remains well positioned. Let's look at some brokerage notes now. Morgan Stanley has maintained its equal weight stance on L&T Technology Services while cutting the target price to 4,420 rupees. Now, the brokerage says that the company's recent strategic portfolio pruning is likely to moderate growth across FY26 and FY27 as the LTTs recalibrates its mix of offerings. So, however, Morgan Stanley expects the pace of margin improvement to pick up, supported by operational discipline and also sharper execution. They have also highlighted that the company's medium-term margin aspirations will remain intact despite near-term growth headwinds. Next up, we have Federal Bank. So that has also delivered a strong Q3 performance with robust NII driving a clear earnings beat and also overall growth coming in better than expectation. Now, profitability has remained healthy, and this is supported by strong NIMs and also a strong uptick, in the other income. So net interest margins have also improved by 12 basis points sequentially to 3.18%, while the other income has jumped 20% year on year, and this is giving a meaningful push to the bottom line as well. So cost discipline also showed through with the cost to income ratio easing 12 basis points to 53.9%, which is nearly 54%. So, and also on the asset quality front here, provisions have declined 8% quarter on quarter to 330 crores, and the slippages have also moderated. In fact, brokerages are turning increasingly upbeat on growth outlook with both Citi and Jefferies maintaining their bullish stance. Now, Citi has a buy rating with a 195 rupees of target, and this is highlighting the strong traction in the MTF momentum and also improving client activity and also steady progress in the wealth and product scale up, while also retaining a clearly constructive view on the platform. So Jefferies is equally positive, also assigning a 195 rupees of target and pointing out that new ventures are ramping up faster than expected. So they believe that the new businesses will be major future growth drivers and note that gross product velocity model mirrors Robinhood's approach. So Jefferies also factors in better operating leverage and also raises FY26-28 EPS estimates. Here's next up we have Investec. So that is staying firmly bullish on Angel One, maintaining its buy rating with a target price of 2,850 rupees. Now the brokerage is saying that a strong quarterly performance should trigger the earnings upgrades with better broking realizations driving a clear PAT beat. So Angel One has also maintained its market share in the broking business, underscoring the strength of its competitive positioning. And Investec is highlighting that the company's digital-first operating model is now delivering meaningful operating leverage, while the new initiatives are showing strong early traction. Next up, we have Kernex Microsystem that has secured a big order win and bagging a contract worth 2,465.7 crores, which is nearly 2,466 crores. So the order is for the supply and installation of 3,024 sets of onboard Kavach equipment, strengthening the company's presence in the railway safety space. Now, the project will be executed within 12 months, marking one of the Kernex, fastest rollouts for such large-scale deployments. And also, what makes this even more, significant is that the company's scale, Kernex market cap, as of January 14, stands at 2,128 crores, meaning that the order size actually exceeds the company's valuation here. And since we are talking about the orders, let's also talk about a stock that was under pressure due to an order. HBL Engineering has missed out in the latest round of locomotive Kavach tenders, losing the bid for 6,300 units. Now, the company was edged out due to lower competitor pricing, which tipped the balance, in a highly competitive round of evaluations. And this was following, the outcome. HBL has now revised the total demand estimate for Kavach-equipped locomotive units to 12,129. And this is reflecting the scale of opportunity still ahead in the nationwide deployment pipeline. Next up, we have SW Solar. So that is soaring after posting a strong quarter 3 performance. Revenue has jumped 13.9% to 2,092 crores versus 1,837 crores, a year ago. So even though EBITDA has slipped 4.8% to 66.9 crores, pulling the margins down to 3.2% from 3.8%, the bottom line, however, showed some stress here, and the company has reported a net loss of 2.8 crores compared with a 14.8 crores of profit last year. So sequentially, if we talk about the numbers, show sharp improvement, and this is backed by record order inflows and also highest ever order book. Next up, we have Patel Engineering. So that is in focus after ace investor Vijay Kedia has picked up a 1.01% stake. And this is signaling renewed interest in the company's growth trajectory. Now, operationally, if we talk about the numbers for H1FY26, show a mixed bag of improving picture here. Revenue is up 7.2%, and this is reflecting steady project execution. However, EBITDA has dipped 2.1%, and this is indicating some sort of pressure on the operating margins. Now, on the positive side, profitability has strengthened meaningfully, with net profit rising 20.1% in the first half of the year. Next up, we have KPI Green. So that has also secured a major solar order in Gujarat and bagging contracts for 534 megawatt solar power project. Now, the mandate covers both supply of goods and also comprehensive on-site services, reinforcing the company's execution capabilities in the large-scale renewable project. Now, the order strengthens KPI Green's position in the rapidly expanding solar energy space and also adds meaningful visibility to its project pipeline. In fact, moving on to some national news, Ministry of External Affairs has confirmed that the next round of India-EU free trade agreement discussions will take place on the 27th of this month, and has also said that the conversations are progressing steadily. The MEA has also confirmed that the European Union leadership will be India's guest for Republic Day on January 26, underlining the growing strategic and economic alignment between New Delhi and also Brussels. And that's about, MEA spokesperson who has come out with this, statement regarding the India-EU trade deal. Moving on, viewers, the Income Tax Department has launched a major nationwide crackdown on food and drug companies suspected of large-scale financial irregularities linked to adulteration practices. Now, teams have conducted extensive research and survey operations across Delhi, Rajasthan, and Uttar Pradesh, with more states expected to be covered soon. Now, officials are examining bogus sales and also purchase entries, year-end billing adjustments, and also suspicious multi-crore single-party transaction. Now, the enforcement action follows the Food and Drug Administration sharing detailed adulteration, related to the intelligence with the tax authorities. Now, investigators are saying that the next phase will target adulterated pharma and also fertilizer networks. Meanwhile, the Prime Minister struck a sharply optimistic tone on India's startup ecosystem today. India's startup story continues to gather momentum. Speaking at National Startup Day, Prime Minister Narendra Modi said that India now has over 125 unicorns compared to just 4 in 2014. He also highlighted that 44,000 new startups were registered in 2025 alone, and nearly 45% have at least one woman director or partner. Now, the Prime Minister has said that Indian youth are no longer chasing just salaries, but are also solving real problems, and risk-taking has now gone mainstream. In fact, from this political developments here, now to a major setback, for Allahabad High Court Judge Justice Yashwant Verma. The Supreme Court has dismissed his petition challenging the Lok Sabha Speaker's decision to admit a motion seeking his removal and also the constitution of a parliamentary inquiry panel. Justice Verma had argued that the committee under the Judges Inquiry Act was formed unilaterally and also violated principles of fairness and equality. A bench of Justices Dipankar Datta and S.C. Sharma has now rejected that challenge, and the controversy surrounding Justice Verma has erupted last year after firefighters reportedly discovered large amounts of cash at his residence following a fire incident, and this has triggered serious allegations and raising questions about the accountability within the judiciary. Now, the Supreme Court verdict now clears the way for the parliamentary inquiry process to continue. Moving on to some global news now. The United Nations Security Council has held an emergency meeting on the escalating unrest in Iran amid sharp exchanges between Tehran and Washington. Now, Iran's deputy envoy they've told the council that Iran does not seek confrontation, but has also warned that any sort of aggression would be met with a proportionate response under international law. So the United States has criticized Iran's handling of the protest, with its representative pointing to internet blackouts and also restrictions that make it difficult to assess the scale of the crackdown. Now, the meeting comes against the backdrop of heightened rhetoric from, President Donald Trump over possible U.S. intervention, although his tone appeared to soften over the past day. Now, the situation remains fluid here, with global powers closely watching developments on the ground. And from rising tensions in West Asia to a diplomatic firefight unfolding in the Arctic, a bipartisan delegation of U.S. lawmakers has arrived in Copenhagen to reassure Denmark and also Greenland of congressional support following Donald Trump's renewed remarks suggesting Greenland is vital to American security interest. Now, the delegation, led by Senator Chris Coons, is scheduled to meet Danish and Greenlandic leaders, stressing that alliances should be strengthened, not strained. And Danish officials have made it clear that any sort of cooperation on the Arctic security must respect territorial integrity and also international law. Now, the visit follows high-level meetings in Washington earlier this week, which Danish officials admitted failed to shift the U.S. administration stance. Now, the diplomatic effort now reflects an unusual moment where U.S. lawmakers are publicly working to stabilize ties with key NATO allies. And with that, we wrap up the show. But before we leave you, so as the world is gearing up for the World Economic Forum's annual meeting in Davos, viewers, from January 19 to 23, we at NDTV Profit tell you why this global gathering matters. And each year, the quiet Swiss town becomes the epicenter of global economic and policy conversations, drawing leaders who shape the markets, governments, and businesses worldwide. NDTV Network will bring you